Good morning. Good morning to all colleagues and all participants who are joining us here in ESMA and online. It's a great pleasure to welcome you all to ESMA's first Data Day. Today marks a significant milestone for us as we convene for the first edition of this event. Our aim is to foster open dialogue and collaboration with all stakeholders, regulators and authorities, market participants and technology experts alike, about data and what can we collectively do with that data. This day is not just about presentations. It is about shaping the future of data reporting and data-driven supervision. To define this important agenda, we recognize that engagement with a diverse range of stakeholders is essential. The diversity of representatives joining us today reflects the shared interest in data, technology, and reporting frameworks. We want this event to set the tone for a new era of cooperation and innovation. The financial ecosystem is evolving rapidly, and data is at the heart of this transformation. Whether we talk about supervisory reporting, risk monitoring, or investor protection, data is the lifeblood of modern regulation and supervision. But data alone is not enough. Information must be accurate, timely, and meaningful. That is why ESMA invests heavily in improving data quality and accessibility, and why we are here today to discuss how can we do even better together. The objective of today is to engage on supervisory reporting and how we can deliver on our simplification and burden reduction agenda. The motivation for launching this Data Day and engaging directly with all of you in this format is rooted in the recognition that data and technology are fundamental pillars of our ESMA strategy. We believe that regular, meaningful exchanges on these topics benefit both us and national authorities as regulators and supervisors, and also you as market participants. This year, our focus is on supervisory reporting and simplification and burden reduction. We are responding here to the evolving needs of the market and the calls for smarter regulation. Digitalisation and smarter data use offer us the opportunity to simplify regulatory frameworks and reduce reporting burdens, while maintaining the integrity and effectiveness of our supervisory system. Let me stress that simplification does not mean deregulation. It means making rules clearer. It means reducing unnecessary reporting fields and flows, as well as making processes more efficient and obligations more proportionate. It means leveraging on the technology to automate where possible, removing duplications, and ensuring that reporting serves its purpose without imposing unnecessary burdens. We will also explore how these changes can support competitiveness and resilience in European markets. I'm convinced that a well-functioning regulatory framework with high-quality supervision is not a burden, and you would expect me to say that, but that it should actually be an asset. It builds trust, attracts investment, and safeguards stability. But we must be smart. We must be comprehensive and proportionate. And that is what we need to achieve. We've heard the feedback we've received from industry. Market participants have told us that there's a disproportionate reporting burden, and we are here today to discuss how we can address that challenge together. ESMA has already taken concrete steps with a number of impactful initiatives that are currently in motion. These initiatives include the call for evidence on the comprehensive approach for the simplification of financial transaction reporting and the discussion paper on the integrated collection of funds data. Our goal is to address the challenges faced by market participants regarding regulatory reporting obligations in these areas and to work together to find practical solutions. Here we are committed to finding ways to simplify and rationalize reporting requirements, remove duplication, and improve efficiency without compromising our objectives of stable and orderly financial markets and investor protection. This dialogue we don't see as a one-off exercise. ESMA fully supports the call for an intense, ongoing dialogue to implement changes arising from the review of transaction reporting. The T+1 governance is a good example of how such a dialogue can be structured. Many have identified it as a valid model to ensure public-private cooperation and engagement. We remain open to consider different models to achieve practical and widely supported reforms. The high level of participation today, I think, already shows the need to work together on this topic and is a clear sign that all of you are willing to engage, and that is certainly extremely welcome. Let me use this opportunity to stress the importance of regulatory and supervisory cooperation as well in this area. ESMA does not exist in a vacuum. We work closely with the other regulatory and supervisory authorities. Our cooperation with the European Central Bank and other European supervisory authorities, for example, on the integrated reporting system for AIFMD and UCITS, is a prime example of this collaborative approach. We recognize that regulatory changes are not the only angle to explore when considering regulatory burden. Centralization of systems and reduction of reporting flows are equally important. A paradigm shift is needed, away from the current model where every regulatory and supervisory need results in a specific new data reporting request. This leads to a reporting framework that really operates in silos. We need to work towards a more holistic assessment of what are the real regulatory and supervisory needs. And that means also rationalizing data flows so that multiple needs can be met through a unique flow of data, supported, obviously, by greater data sharing and collaboration between authorities. This should be reinforced by a new way of legislating on reporting requirements, avoiding siloed approaches that have created the duplication we have highlighted. We should be designing reporting regimes that are consistent and coherent across different legislative frameworks. And this is not just about efficiency, it is also about resilience. A fragmented reporting landscape is ultimately a vulnerability, while a streamlined, integrated system is a strength. And that is the vision we are looking at and we are working towards. The adoption of new technology is a key part of our strategy, but it must be approached with proper care. It is essential to strike a balance between leveraging robust, viable, and reliable and widely accessible systems and capitalizing on the advantages of innovative solutions. Artificial intelligence, for example, offers significant opportunities for both regulators and industry participants, but in itself, it's not a panacea. Careful implementation is required to ensure that new technologies deliver real benefits without introducing new risks or new complexities. There are several examples of how technology can be harnessed to support effective supervision. Since 2022, ESMA has embraced, for example, cloud-based solutions for our data platform. And in 2024, we began working more closely with the national authorities on data and data supervision by launching our SHARE environment. Moreover, our subtech network of experts has put together more than 300 experts from national competent authorities. It allows staff at the national supervisors to work together on different data analytical initiatives, helping our goal of efficient and effective supervisory convergence. It's really amazing how these people get together, they share code, they look at what can we do, what is someone else already doing, and how can we learn from that and use it again. Similarly, our initiatives to address greenwashing, which you should be hearing more about in detail later today, demonstrate our commitment to using data and technology to tackle emerging challenges in the financial markets. Today, we will also discuss how technology can support proportionality, enabling supervisors to focus resources where they are most needed, and how data analytics can enhance risk-based supervision. Looking ahead, I can certainly assure you that we at ESMA remain firmly committed to the ongoing efforts to simplify and improve efficiency. One of our priorities is to deploy digitalization and data to reduce burden, improve reporting, and support better outcomes for market participants, supervisors, and regulators alike. Let me conclude by reiterating ESMA's firm commitment to open dialogue, to collaboration, and to practical problem solving. We are here today, like you, to listen, to learn, and to work together with all of you, to build a framework that is fit for the future, one that supports innovation, protects market integrity and investors, and delivers real benefit for all stakeholders. And with that, I wish you a very good day. I hope you have productive and engaging conversations. And thank you very much for joining us for this first ESMA Data Day. And with that, I hand over to my colleague Olga for some practical announcements.
Thank you, Verena, and good morning, everyone. For those with whom I didn't yet have the pleasure of meeting, my name is Olga Petrenko. I'm the Chief Data Officer at ESMA, and I also have the honor and the privilege to lead the team who made today possible and make this event happen. I have a few housekeeping announcements for you. In the meantime, we will invite our panel to start settling into their places, and we'll make sure that colleagues online are also able to join. From my side, I wanted to make you aware that we have asked all speakers and panelists to plan their time in such a way that would allow for a few questions at the end, and there are a few ways you can raise those questions. For our attendees in the room, you can either raise your hand if you are that brave, and we're going to bring you a microphone. Otherwise, you have a QR code on the flip side of your badges. You can scan the QR code, you can send us the question, and colleagues at the back rows will try to navigate the questions which fit nicely the panels or the questions that are being discussed. For our guests online, whom we also warmly welcome to this event, you have received a link to the question form, and we invite you to use that link if you want to send your questions in. We will receive them and again try to navigate through them as the discussion goes. Another point is about logistics within the room. To make sure that our panelists and speakers don't get disturbed during the event, we kindly ask everyone to use the entrance at the very end of the room if you need to go take a call, have a cup of coffee, or use the restrooms for any other business. Let's try to keep the front door closed to make sure people can really concentrate on the very important topic of data reporting. Last point. As Verena mentioned, this is the first data day we're organizing. It's a lot of doing by learning for ourselves as well. Our plan and ambition in principle would be to have the event repeat, hopefully more than once. But whether or not that is going to happen does depend exclusively and solely on your feedback. What you do like, what you do not like, what you find helpful, what you find not relevant. Any feedback we can receive from you, both positive, of course, but also negative, that would allow us to improve, will help us immensely to see whether we're going to repeat this in 2026 and which topics, with which speakers we're going to put on the agenda. That would be it from my side. Not to distract further from the today's agenda, I'm just looking at colleagues. Do we have our online speakers present? All right. Another minute, perhaps. Right, we have Alexandra online. Do we give another moment? We're going to give another moment for one more speaker to join us. And in the meantime, I would like to remind you that this panel is being moderated by Armi Teipale, who is the head of markets at the Financial Supervisory Authority in Finland, and who also happens to be the member of ESMA board and a chair of ESMA Data Standing Committee.
Now I'm testing. Good. So good morning, everybody, and I hope that we are going to... Yes, Claudia is there. Very good. Good morning, ladies and gentlemen, both here in the event and also those of you online. As Olga already introduced me, but maybe shortly, so my name is Armi Taipale, and I'm coming from the Finnish FSA. And I'm moderating the first panel here today, and we are going to focus on strategies for simplification and burden reduction from an EU regulator's perspective. And as Olga mentioned already, in the housekeeping area issues, you will be able to raise your hand here in the room. I will leave around 10 minutes for questions at the end of the panel. And for those of you who are participating online, you will receive or have already received a link to ask questions, and some colleagues from the room will present them here. So QR code is available here in the room, and also by raising your hand, you will have the possibility to ask questions or comment the panelists. Now, I would like to introduce our panelists for today, and I will start here in the room with Natasha Casanave. Good morning. And she has been the Executive Director of the European Securities and Markets Authority since June 21. She was previously Managing Director in charge of the Policy and International Affairs Directorate at the French authority des Marchés Financiers. I'm sorry for my pronunciation. And between 2012 and 2016, Chair of IOSCO's Policy Committee on Investment Management. Prior to that, she worked for European consultancies, specializing in corporate governance and the promotion of investor rights. She started her career in the valuation and business modeling team of Ernst & Young Corporate Finance. Natasha holds a master's degree in economics and finance from the University of Paris, Dauphine. Good. Then to our online participants, good morning, ladies. Maybe I start first with Mrs. Claudia Buch, who is the chair of the supervisory board at the European Central Bank, a role that she assumed on 1st of January 24. She previously served as vice president of the Deutsche Bundesbank from 2014 to 2023, overseeing banking and financial supervision, financial stability, and related domains. Before entering central banking leadership, she built a distinguished academic career as a professor of economics at several German universities, including University of Tübingen and University of Magdeburg. Scientific director at the Institute for Applied Economic Research, and head of financial markets research at the Kiel Institute for the World Economy. Her scholarly work and policy engagement focus on banking regulation, financial stability, and the structure and supervision of banking systems. And our last but not least panelist is Alexandra Schröder, who is the Deputy Director General at the European Commission, overseeing the work of the Director General for Financial Services and Financial Markets. She has long-standing experience in EU policies, having joined the European Commission in 1996, where she held different positions inter alia in competition, industry, justice and consumer policies. For 10 years, she was a member of cabinet of several European commissioners. Before joining the European Commission, she started her professional career in the European Department of the German Ministry of Economic Affairs, and she has a graduate degree in law. So warmly welcome to you, all of the panelists. Now, I would propose for the panelists that we would have a first name basis, if that's okay with you. Okay, you're nodding. Great, thank you. And then I will maybe give first to all of you the possibility to share your views on simplification and burden reduction in general. And I would like to start with our online participants. So if you could give us a short introductory remarks that you have on the simplification and burden reduction. And I would start with Alexandra, please.
Thank you very much. I hope you hear me well. Greetings to Paris. Sorry for not being with you in person today, but I'm very happy to join. And I also wanted to thank you very much for this initiative to do an ESMA Data Day. I think this is a great idea, especially in the context of simplification. I think you have now heard that this is a topic that is very present when it comes to our policy making. We'll certainly discuss later what does it really mean. But it's certainly also very important for us that we have a critical look at our legislation and to see what do we need and where are possibly things where we could live with a bit of a lighter touch. All this discussion about simplification has to be seen in a broader context for the European Commission. And what I mean with that is basically a wider competitiveness angle where we consider taking the geopolitical events, our role in the world, where we stand with the financial sector, but also with the corporate sector. It is extremely important that we take all possibilities, that we have a very strong and stable financial sector, but that we also have to see that in a competitiveness angle. I have one maybe introductory message I wanted to leave with you, and then we will certainly go in the details later. When it comes to simplification, I would underline one basic message from the outset, and that is that for me, completing our EU single market for financial services, and we are not yet there, for me would be the most powerful source of simplification. And why I'm saying that? Because there are several reasons. We still see a lot of fragmentation happening today in the different EU member states that finally give us a quite strong disadvantage with regard to other jurisdictions. We often see different implementation of the EU rules that have been designed. There is this issue of gold plating, we are calling it. Sometimes member states go above what has been agreed at EU level. We have an issue of limited interconnectedness between different entities in the financial markets. And we also see still very divergent supervisory approaches. So for us, getting a real single market for financial services is key for simplification. You may have heard that hopefully tomorrow the European Commission will adopt a very ambitious package on market integration and supervision. And if we get this done, and I know it will be not an easy task, I think we will do a big step forwards towards simplification.
Okay, no, it's good. Thank you so much for those insights already. Now I would hand over to Claudia, please.
Thank you very much, and let me also thank you very much for having me. Actually, when I saw ESMA Data Day, I thought this is really for me. As you said, I have a previous life doing also research, analytical work, and actually data is key to the work we do every day. So we need to be evidence-based when we do supervision. We need to be evidence-based when we I think about regulation and the effects. And so I think it's key that we get this infrastructure in place, which really enables all of our work. And I look forward to the details that we will discuss on the panel. But before that, and here I'm very much aligned with Alexandra, what she said also about, we have a big debate about simplification, and really harmonization would be the biggest contributor to simplification, because we're operating with many different rules across Europe, which are often there for very good reasons. But of course, it makes the system quite complex, and I think we can have great benefits from more harmonization across Europe. Well, let me put our debate a little bit into a broader perspective, again, much in line with what Alexandra said, because we do have a banking sector which has become way more robust since the great financial crisis, the European sovereign debt crisis. So we see it in all the indicators: bank profitability, capital, liquidity. So all these indicators look good, and that's a great achievement. I think it's the achievement of better regulation, better supervision, also better risk management within the banks. We also have to acknowledge, of course, that the past shocks that have hit the euro area, the European economy, COVID, the energy crisis, were also to a large extent buffered by fiscal policy. So that, of course, supported the resilience of the households and the firms, and there was an indirect benefit also for the banking sector. But now the environment in which banks operate, in which we have to do supervision and think about regulation, has become quite challenging, and with geopolitical risk being heightened, with a lot happening in terms of digitalization of financial services, with many positive effects potentially, but also with the risk of spillovers from risks in other parts of the financial system to the banking sector. So we need to remain very vigilant. The banks themselves, and this whole debate in terms of simplification is, of course, embedded in a discussion on competitiveness. The banks themselves can actually do a lot in this environment to further promote their resilience, both operationally and also financially. And I always stress the operational point, because we do see increased cyber attacks affecting the banks. So the data infrastructure, IT infrastructures also need to be resilient, and that requires some investments also into these infrastructures. So long-term investments to protect the resilience of banks. And we think that actually these investments not only make the banks more resilient, but also enhance their competitiveness in the long term. So I don't really think what you sometimes hear, that there's this trade-off between resilience and competitiveness. I don't think it's really there. I think if the banks make the right long-term investments, this is good for their resilience, and it's also good for their long-term competitiveness. And we see this in many studies. We actually see that some part of the driver of the profitability differences in banks internationally, particularly when you compare European banks and US banks, part of the differences in profitability that we've seen over many years are caused by differences in IT investments, IT infrastructure. So closing this gap would also close the profitability gap in a more sustainable and long-term way. So clearly, I don't think that resilience and competitiveness, that there's a trade-off. So having said all this, we're doing a lot to make sure that what we do in terms of supervisors, making sure that the banks stay resilient, but also do it in a way that it doesn't impose undue complexities on the system. So we can do a lot, and we have a big reform program on the way to make our supervision more efficient with the given resources that we have. We need to deal with all these new challenges that are emerging, so we need to make sure that we use our resources in the best possible way. We're also enhancing our effectiveness by communicating very clearly with the banks what we expect, what are the root causes of deficiencies that we find, and then, if needed, also escalate supervisory action. And we're becoming more targeted with a large set of reforms to actually do this. And we enhance the focus on relevant risks. So that's also part of our reform strategy, more efficient, more effective, more risk-based. And we have a big reform program in place. One is about our, let's say, core health check of the banks, the supervisory review and evaluation process. So this is a reform we actually initiated a couple of years ago. It will be fully implemented next year. And we have a second big set of reforms, which is called next level supervision. So a lot could be said in terms of the details of what this implies. It's about making all our procedures more efficient, more effective, more risk-based. What is maybe particularly important for this panel here is this next level supervision has a work stream on reporting. So how can we make sure that the information we request from the banks is done in the most efficient way, that we share data and information with other authorities, and that we really reduce the reporting templates that we have. And just to give you one example, we have a so-called short-term exercise, which is an annual collection of additional supervisory information which is not available in other reporting frameworks. And here we will have a 20% reduction in data points next year because we really went through the whole short-term exercise to streamline what information we request. So this is a very practical, tangible example of what can we do to, at the same time, maintain the resilience in the sector, which is so crucial for financial stability, for competitiveness, but also make sure that we deliver what we do in the most efficient and effective way. So let me stop here because I'm sure we get into more details on data and reporting, but I thought it was useful to put it a little bit into this bigger picture of where we stand right now. Thanks a lot.
Thank you, and I see a lot of nodding here. Really, I think the audience and also Natasha is pleased to hear that, because I think that similar things are happening also at ESMA. But so on simplification and burden reduction in general, what would you say?
Thank you very much, Armi. And let me start by echoing Verana's words to welcome you all to this first Data Day. And we're really thrilled that we've been able to organize this event, and with the enthusiasm and the people in the room, it's great to see that this is happening. I wanted to say a few words on ESMA's journey in relation to data. We are extremely committed. We've been investing for a number of years because we are true believers exactly in, I think, the way Claudia was mentioning this, that we need to use data in our day-to-day work to be relevant, to support the data-driven supervision, to support the evidence-based regulation, to support also looking back whether we have received the data and had the effect that we wanted to have, or maybe we need to make tweaks to some of the regulations. So really, data is very much at the heart of ESMA's strategy and how we see our role in the system. We want to be a contributor to making the system more effective, more efficient. And so today is also our contribution to the community to see how can we work together to make sure we have better outcomes. So I wanted to share a few words there. We are talking today about simplification, and I think if we take a step back, rightly so, over the many years there have been many legislative initiatives that were designed to try and improve the transparency in the system. So every time putting in place a new reporting requirement to make the system safer. But now we're at a moment where we've been told, stop. And so we are at a very interesting moment, I believe, where we've done a lot. We have identified the information we need. We've worked on the data we have collected to try and see what is it telling us, what can we learn from it. But we can maybe now look back and say, okay, what information do we actually need? Do we need it from all these sources? Is it right that we ask this information through this channel or that information through that channel? Can we not be more efficient? So now is a very interesting moment where we have the political momentum as well. Alexandra has said, we need you to simplify, we need you to make it efficient. And so we're also here to bring everyone in the ecosystem together so we can make sure that everyone can do their job properly. So us as supervisors, we can have the right data to actually effectively monitor what's going on in the market, that the firms also can report the data that we need to collect. but at the same time that we can identify where potentially it is reported twice and we can remove some duplications, or maybe some of this information we can collect through a different channel, or we do not need anymore. So really trying to be smart. And from an ESMA perspective, when we think about simplification, that is very much also highlighted if you look at the Draghi report as an essential element for Europe to simplify and go on the journey of being more competitive. Simplification is mentioned many times. We have considered at ESMA that the area where we can be the most relevant and have a direct material impact is data reporting. And that is why we have embarked on some of the projects that Verena mentioned, the call for evidence on transaction reporting, and the other work stream that we're doing on integrated fund reporting. We know these are not initiatives that can overnight simplify the system, but we do think those are the right ones to make us make material progress and simplify really for the system, and not just a kind of a simple tick-the-box exercise. Of course, the simplification, it has been said, but I think maybe we will touch upon it again. It should not be at the expense of the security and the safety of the system. We need to make sure, whatever we do, that we maintain the information that we need to support market integrity, to support effective monitoring of orderly markets, and as Claudia was saying, also for financial stability. But that does not mean that there are not areas where we can improve, and I'm sure there are plenty of ideas in the room, so we're very much looking forward also to listening to you. I wanted also to say a big thank you for the very constructive and, again, enthusiastic engagement we have received from our initiative. So I think at least we have identified the right topics. Whether we will make it all the way and satisfy everyone, we shall see. But we really are trying to make that journey, and we're very grateful for everybody that is out there. So let's try to have smarter, simpler, effective data reporting.
Sounds good. Don't put it down. Not yet. So Natasha, continue with you. So what is the difference between deregulation and simplification? Is there one? Because I think that many from the industry say that we should have a deregulation exercise. So would you agree?
Thanks. And I think it's a very relevant question to have. And I think there's been about a lot of misperceptions. We can do a lot in terms of simplification without deregulating. And so let me give you an example. At ESMA, we have looked at the data we were collecting, and we have identified that through transaction reporting, we were able to have the data that we needed to be able to then restitute to the market the calculations on transparency that we provide regularly to the market. And so we could decommission some of the data we were collecting that was specifically there for transparency calculations. Outcome is the same, information is the same, but there's one less reporting channel, one less system to operate. Similarly, we've seen in the supervisory space that we looked at all the information we were collecting from supervised entities, and we realized that over time we had been collecting information from different channels in different ways, but what we actually use, what we actually need, and the frequency we could reduce by 30%. And then if there was a specific need for one specific study or concern in the market or something happened, we can have an ad hoc data request for that. So from our perspective, we still are equipped with the data we need to do our job properly and monitor markets, but we didn't need all that data, and we could relieve the market from those requirements. So I think there are many areas like that. One more I would highlight is data sharing. So what we're trying to do at ESMA is to try as much as possible be a facilitator, become a data hub where we can collect data. Today on our systems we have, it's not always known, but more than 3,800 users on our systems generally. And we try to be a data hub so that then if the information is reported once, then we can share with other authorities, and you can reduce the burden of having to report to different entities. And Claudia mentioned that we are working very closely with our ECB colleagues. We think that is really a very critical element to make us go towards simplification without deregulating, and so without not being able to actually monitor and make sure that the risks are properly mitigated, especially as Claudia said, in the geopolitical environment we're living in. We cannot really lower our guard in terms of financial stability and risk monitoring, but certainly we can simplify without necessarily deregulating.
So what about you, Claudia? How do you see this? Is there a need for deregulation in the banking sector?
Well, certainly not. Like I said, I think we really have a lot of very good evidence on what benefits the post-crisis reform agenda has brought. No, so and this is thanks to, even with the often patchy, fragmented data environment that we're all living in, the Basel Committee and the Financial Stability Board, they've done a very encompassing, holistic, global evaluations of the effects of the framework, going very much into detail, also looking at data sets for individual countries to trying to see whether there are any unintended side effects of the post-crisis reform agenda. And the evidence is very clear that the benefits of the reforms outweigh clearly the cost. So, I mean, there can be, of course, short-term adjustment costs if you, for example, introduce higher capital requirements. After the global financial crisis, when the system was undercapitalized, of course, there were some banks that were struggling with maybe meeting the requirements. But overall, we've seen that the competitiveness of the sector has not suffered, lending has not suffered, and this is clearly attributed to the benefits of the reforms. And as I said, the environment has by no means become less challenging. Quite to the contrary, there's lots of uncertainties out there. So we need to maintain the resilience. So no case for deregulation, clearly also no case for de-supervision, so doing less supervision. Quite to the contrary, we need to be very clear on where we see deficiencies, how the banks should remediate them, having clear timelines for that. And I think, of course, I mean, it's not always that banks only appreciate being supervised, but I think in the end, it's also something that the banks acknowledge, that it's good to have this clarity from the supervisory side. Having said all this, and this is what I said earlier, of course, we can improve in the way how we deliver on supervision. We also need to adapt to the new environment. We need to be more streamlined in our procedures. We need to really do a lot to improve data sharing so that we collectively also have a good picture of what's happening out there and where are the risks and how can we mitigate vulnerabilities and make sure the system stays resilient.
Thank you. And now I would go to Alexandra. From the European Commission's perspective, what is the aim that you have on the simplification? And maybe if you could tell us something about the forthcoming SIU package with this respect.
Yeah, and I think first of all, we all here on the panel are somehow aligned about what is simplification and what is deregulation and what is it not. I don't think they're very controversial when it comes to the different positions, but I think it is indeed a bit a fact that after we started this discussion, which was really useful, because I think at some point in time it's always good to have a critical look in the regulation we have and see what works, what does not work. It has maybe here and there is trying a bit to be used in a way, okay, this is a very heavily regulated sector, let's rethink it totally. This is not what we have in mind, and I really wanted to be very clear on that, and I think Claudia and Natasha have explained it very well. I mean, we have good retrospective perspective that our rules we have done, especially after the financial crisis we had, have very much served their purpose. I think what is indeed echoing what Claudia and Natasha said is somehow to give the rules we have today a look in. It sounds a little bit boring, but I think it's quite important to see, are there overlaps? Is there, for example, can we do more digitalization? Are we still a bit in the 19th century when it comes to reporting? Are there inconsistencies that have somehow happened because there are many legal instruments that come together? Natasha was mentioning data sharing. I think this is also a very important point for us, because often data exists. They either exist in ESMA, they exist in the ECB and the SSM, but they're not always shared. And here I think that would be a lot of facilitation, because the reporting has basically been done, and then the data are there, they are useful, and they can be used for different purposes. It sounds a bit simplistic, but in the end, when we discussed with Council and Parliament the data sharing proposal the Commission has made, for me, sometimes was a bit striking that there was not often so much appetite to share data. Okay, I understand data is always somehow a bit sensitive. I think there we need a little bit a different approach, somehow relying on this. This is one's only principle. So you have the data already reported, and then this can be used. So again, for us, what we have in mind when it comes to simplification is really to have a critical look into inconsistencies, overlaps, data already existing, but we are not at all looking into something that would put into question the system we have established, because indeed, I absolutely agree. I think, and in the end, it is a success story. So we should not now start and somehow see the pendulum swinging in another direction.
Thank you. Maybe continue with you, Alexandra. If we look at the competitiveness of the European market and especially towards the UK and the United States, what should be done? Is simplification enough in this respect?
Yeah, again, I think we should not be dragged too much by what's happening in other jurisdictions. Of course, there is a global competition, and it is important to observe what is happening, especially when it comes to other strong financial markets as the US and the UK. But I think we should be a bit more self-confident in a way. What have we achieved with our rules? And again, picking up of what we just discussed when it comes to simplification, deregulation. For the time being, I haven't seen a situation that would lead us to the conclusion we have too much. We should deregulate. On the contrary, I think we need to have good rules, clear rules that are understandable, that can be applied. And of course, I think we have to understand that financial service regulation has a sort of complexity in it, but this is also dealt with those who can manage this complexity. For me, it is really more to see, okay, well, is there something that has been grown over the years, and we do a bit of a cleanup. I think this is responsible policy making, but not completely turning the world upside down. I mean, we have seen it a little bit when the United Kingdom left the EU. There was a very clear message. Now everything will become much simpler, much more competitive, much more deregulated. Honestly, I don't have seen this anyway, also not that much. I mean, yeah, maybe in some specific areas, but I wouldn't say that the UK has done a 180 degrees turn. Okay, with the United States, the situation is still something we need to observe. I mean, we are all quite curious what will happen with the implementation by the US of Basel. I hope at least that there is some good and common sense that, okay, there is always this question about what the US calls gold plating of the Basel rules. But that in the end, also from the US side, there will be some, yeah, I would say responsible attitude that what has been discussed in Basel over many years should not just be thrown under the bus.
Very good. Now, Claudia, what lessons have you learned from previous simplification efforts, and what has worked well? Is there anything you wouldn't do again, and why?
Mm-hmm. Well, thanks for the question. I mean, just quickly also respond a bit to what Alexandra said, and unfortunately, I mean, the panel is not very controversial here, so we very much agree with what you said. So just some facts also on this competition aspect. No, so it's actually many banks that are active in Europe are not directly competing with the US banks. It's a few banks that are active on global markets. So we have very national domestic markets in many cases in Europe. So if anything, we have too little cross-border competition. No? So this is one of the things we mentioned earlier. So more harmonization, integration, that would be the way forward. And also for those who do compete internationally, as I said, it doesn't seem to me to be the case that it's really the regulation that makes the big difference. It's other issues. It's, as I said, IT investments. The US banks, they operate out of a larger home market. So that's again why further promoting the single market is so important. So I think some nuance in this competition discussion will also be useful. As to what works in terms of simplification, streamlining procedures, I would say that, I mean, first of all, as I said, we're doing a lot here in the SSM to streamline our procedures. And what is really very important is to have a clear vision. So we commissioned a report, a vice persons group report, a couple of years ago, actually, to advise us of what we can do, what we can improve. And they generally found that the SSM is working well, but they also found ways to improve. And then we started a process discussing it in the supervisory board, involving the teams. What can we do to actually implement this? And as I said, it's now out in the field. The full implementation will be until next year. And we already get some positive feedback from the banks that they feel that our communication has become more streamlined and so forth. So really, I think planning all this very carefully, also listening to the people who are actually implementing everything, as we do here in the SSM, I think that's crucially important. And one of the strategies that we've been pursuing since a couple of years now is to have a very dedicated sub-tech agenda. So using modern IT tools to digitalize our processes, also to make sure that data can actually be shared. So I'm really grateful to the Commission for the data sharing initiative. So we've been all waiting for this for long, and now it's also the time to implement all this. But of course, to really make very effective use of that regulatory framework, we also need IT infrastructures that make it possible that we can seamlessly share data, that we can check. Of course, we also need to have a good data governance. We have user rights to be defined because we want to make sure that we don't violate necessary rules around data. So, but all that requires a data infrastructure and also just like for the banks, which I mentioned earlier, but also for us internally. So I think investing into this, having planning all this, I think that's really key to then. It takes some time, it takes investment, but in the end, we can leverage upon these investments and really improve the way we do, the way we work.
Thank you. Would you like to react to this as well, Natasha? So what efforts have you made, and has everything worked as you planned, or is there any hiccups, so to say?
So it is a journey, but I think we're very proud of where we've come, and we have high ambitions on where we want to go. So we've developed this big platform, so ESMA's data platform. It's on the cloud, it's very effective, and we have onboarded all the community. So what Verena mentioned in her speech, we have 400 users there of the community, so national supervisors, for people from the European supervisory authorities. And this is a platform that is used daily, that collects a tremendous amount of data every day. And this is a system that we believe is really serving the supervisory community more generally, and that can facilitate data sharing across for different needs. What we have learned is that, what I was saying earlier, we believe now that we need to shift the way we collect data to make it more meaningful and lean in the system and more effective in what we're trying to do. So ideally, working with the European Commission, moving from sectorial regulations to a more holistic approach of what are we trying to collect. So the journey we're taking in relation to transaction reporting, we're trying to look across. So for the acronyms, apologies, but MIFIR, EMIR, SFTR, so the data that is reported through those different regulations, trying to look across to see what do we need, where are the inconsistencies in definitions or in frequencies or duplications that we have there, and then come with there. We've also identified some basic principles that, as Alexandra was saying, could seem simplistic, but in this environment are really determining factors of success and also cost efficiency, and that is avoid duplication, report once, and then share the data, And that is something that if we manage to do it in a systematic way, then yes, the system is efficient for everyone, but it needs to be thought at the outset. Claudia mentioned the planning. Reporting is typically an area that requires a lot of planning, so from the regulatory phase, and I would encourage everyone in the room to engage with us very, very early on, so that we get that information on for the people who will implement, what are the crucial steps, what is needed there. We also have learned that we need to be clear on data standardization, so how can we work together having global identifiers to make sure that we have the same understanding, and then work on implementation. Another simple factor is timing. We've often bumped into that hurdle of having to implement with the standards not fully there, so we're also very keen to make sure we have sound processes, sound regulations and requirements coming to the market, so we have proper time to debate, to discuss, to stabilize the requirements, and then give due time also to those who need to implement, supervisors and market participants. It just makes a more efficient system in the end. So really, generally, we would like to embark on that journey. We have defined a data strategy at ESMA that was already ambitious in the past to work on access, on use, on being a hub, trying to contribute and to data share. And now we're looking ahead. We are updating our data strategy, as you know very well, Armi, given your role in our governance. But we would really like to try and move to that next step and bring in new technologies. So notably working even more on subtech than we are doing today.
Very good. Now, Claudia, and this question is for all of you, but starting with you, there is an active discussion ongoing on whether the mandate of the European supervisors should be amended and the objectives on growth and competitiveness should be added, like in the United Kingdom. How do you see this?
Well, I have a very clear view on this, maybe not very surprising, but I think we're delivering well on our mandate. And one of the reasons is that we can focus on this mandate. And as I've said, the mandate is to keep banks sound and safe. So we act in the interest of the depositors, but of course, generally in the interest of financial stability, the wider public, and also the policy makers who, if the system is not resilient, if there's no financial stability, then other policy areas need to maybe come and support the system. So really focusing on this mandate allows us to be very clear, to have a clear strategy. And as I said earlier, I don't think it comes at the expense of competitiveness of the sector. So of course we need to monitor unintended side effects. This is what all good regulator supervisors are doing, but this is not the same as combining mandates. I think having a very clear mandate that we have has done a very good service to Europe and its citizens. We have, of course, I mean, there's also competition authorities that need to deal with competition issues, and as I think it's also they're not here at the table, but I guess they would argue in the same way that it's also good to keep their mandate clean and targeted. And then when it comes to growth, I mean, there's so many things. If you read, for instance, the Draghi report, which I think started this whole debate a little bit, there's so many factors that affect growth, starting from labor market policies to tax policies to whatever. So it's basically all the different policy areas. So I think, again, having growth mandates, competitive mandates in the mandates of supervisors, I think would not do us a favor. Quite to the contrary, it might lead to a watering down, to a dilution of different mandates. And I think this would not be the right way to go.
So how do you see this, Alexandra? Are you planning some legislative acts on this?
I think this is a good question. Maybe not so easy to answer, but I do my best. And again, I think we are not so much in conflictual mode this morning in the panel. I think we all share basically the same conviction and values. So it's very much, I think, in line with what Claudia just said. But I think before we start having such a discussion, should there be something added to the mandate of the European supervisory authorities or not? I think it's absolutely necessary that first we take a step back and consider seriously why have these authorities been created, what was our driving force, what were the reasons to have them, and are these reasons still valid today? And I would already reply to this answer with a clear yes. And this is basically things that are our foundations for a safe and sound financial system in the European Union. And that is, of course, financial stability. That means investor protection, also very important for us, in particular, but not only when it comes to ESMA, of course, for the others as well. That we have the rules in place, that our markets are integer, market integrity, very important. We have seen sometimes very preoccupying cases. And of course also that our financial system is effective. And what would that mean if we would add to this list I have just developed competitiveness? Would it really change something? I'm not so sure, because even today, if the ESAs are taking decisions, they are not blind on the competitiveness angle. And let me give you a few examples why I'm saying that. I mean, first of all, before they start working on regulatory issues, on rules, on RTS, on ITS, there's always a very strong consultation by stakeholders, including the industry. So it's somehow, for me, a sort of business as usual day to day, that there is consultation done, that the views of all the actors are taken into consideration, and that there is also a sort of cost-benefit analysis, which is absolutely needed before we come. So just to include this in the mandate, I think it may also give a bit of a misleading signal. But again, I'm not saying that competitiveness is something that is completely out of the scope of the ESAs, and I think Claudia said it this morning already very clearly about there is no trade-off between resilience and competitiveness, and I think this is basically also a message I would very much underline, that this is the same when it comes to the European supervisory authorities. And I mean, even if you look in the ESMA regulation as it stands today, without looking into what is the Commission's proposal that are coming quite soon now, there is already wording that ESMA should also take into account of competition, global competitiveness when it executes its mandate. So all in all, to summarize in a few words what I said, I think we would possibly prefer to keep the mandate as it is, because we don't see a need to change it. But again, it's of course a topic, what are the effects of the rules ESMA will design, and then they have to be implemented. How does that fit in the overall situation for those who will have to apply this without a specific mentioning of competitiveness?
So Natasha, how would you react on these comments? Would you agree or disagree?
So I have the easy role to speak last, so I can only agree with what was said. I think what we would say is indeed that if you have a strong, robust regulatory framework, it serves the competitiveness of the market in general. It is for investors, market participants to operate in a market, they need to have that trust in the system, and actually strong regulation, strong supervision serves the purpose. And the largest jurisdictions where you have vibrant capital markets, you have strong supervision, strong regulation there. So from our perspective, the system we have today, where we have a clear mandate with our three missions: investor protection, orderly markets, financial stability, and that recital that tells us to take into consideration global competitiveness is sufficient. We read the UK example more as a complement related to the fact that there has been some shift in the regulatory power that has been given to the supervisor, and therefore that goes together, which is very different from the setup we have here. So maybe just to make it short, we believe the system as it stands works and allows us to deliver on our mission in an effective way.
Great, good to hear. Now, my final question before I get questions from the audience, both in the meeting room and on those online. So the industry is quite vocal on the cost of the regulation, especially for the cost of reporting. Is there a need to change European rules to achieve simplification of reporting? And in case yes, in what level? Natasha, what would you say?
I believe the answer is probably yes. I think there are two things we need to change. We need to change the architecture, or the mindset, I was going to say, but the Commission already has a supervisory data strategy that we very much support, that has this idea of looking, as I was mentioning earlier, holistically at what we're trying to collect. And we believe we at ESMA, with all the stakeholders we are engaging with, can provide some input to identify what are the areas. So there's that mindset shift, so that going forward we are more cognizant of what the implications of data reporting are, what the investments associated are, and so we would like that probably to change. And then separately, you have for some of the existing regulations, there are some tweaks that can be made, some efficiencies that we can already put in place. And that doesn't necessarily need what we call level 1 change, a legislation change, but there might need to be some changes at the lower level, so technical standards or other elements, and that is something we would need to work on. But if you look at the complexity, I will just give that example. In the investment fund reporting that we're trying to do, that's why I use the word journey, it's because we have at this point done the diagnosis that we can see that there are requirements at national level, there are requirements that are also duplicative at European level, and to make all those requirements move, in some cases it can be at the national supervisors level, it can be national parliament, it can be EU legislation, EU regulation, it can be just changing data sharing. The complexity actually of the system we have in place is remarkable. So what we're trying to do today is identify those big knots that we have, those areas where we have identified a lot of work needs to be done, try to clarify what would be the right roadmap, and then we would like to put in place a proper governance to work with the right stakeholders around the table, so we can identify together what are the milestones, what would need to be changed, is it regulation, at what level, is it investments, is it data sharing, so we can gradually get to the point where we have what I said before, an entity reports once, and whenever it's reported, it is then onwards shared. That is the end goal, but I think depending on the area, the situation is slightly different. But there are certainly a number of areas where, yes, we will need the support and some legislative changes. We're working with the Commission.
Thank you. I hope that Alexandra made note on this. Maybe first to Claudia. So do you need a change or need for a change in the banking side?
Yeah. Well, I mean, our strategy clearly has been to first start with the things we can do internally, so that we don't need to wait for anybody and that we don't need to have lists what others should do, but rather see what we can do internally to streamline, to focus. So, but that, of course, I mean, it's very much in line with what Natasha said. That reaches its natural limits because there are legislative changes that are needed. There's also the decommissioning of certain reporting requirements that is needed. Sometimes it's also about allowing us to share data. We spoke about the data sharing, so because very often people said, and rightly so in the past, that I can't share this information because there's legal constraints. So this is why we, in addition to our internal work, we also came up with a list of things that would be useful to change from a legislative point of view. As you know, there's a high-level task force here in this building of the Governing Council that will come with recommendations also to the Commission on this item as well, on reporting. So I don't want to anticipate the results, but I'm also not a member of that task force. But I think there are things that can also be done and changed in the legislation to enable all this to happen that we've now been sketching here. But I think it's always useful also to start at home and do your homework at work, and then reach out and do more potentially. Thank you.
Thank you. So, Alexandra, are we going to see during this week some proposals that are going to answer to this question? So, level 1 changes?
Yeah, I mean, I could speak quite a lot on that, but in the interest of time, I just give you maybe a few highlights. But one sentence coming back to your question, I think that the cost of reporting is certainly a serious issue we have to look into. But again, here, in very much in light what we just discussed, I think the end is the question: is that reporting, do we need that reporting for a certain purpose? And that will always come with a bit of a price ticket. But in the end, it will have a positive effect. But the question is more: are we sometimes, and we are confronted with reporting that is not 100% necessary, can be done differently, can be done cheaper. I think that is basically what we are looking into, but we are very mindful that this is a topic we are really asked as a part of the legislative machinery to look into. And, you know, we have already started doing quite a lot, but I'm not going through this long list. I mean, especially on sustainable finance reporting. I mean, I think this is very prominent with the omnibus that is now discussed with Council and Parliament. And here again, it is basically not to go completely away with reporting, but especially take into account the difficulties we have seen for smaller companies. But we will stay, and of course there is a discussion ongoing on, okay, how you define what is a small, what is a bigger company, and there's several views on the table. But that was basically our concern, that for smaller companies there is a lot of costs coming with the reporting, and maybe the effect is not so strong as we would concentrate on bigger ones. So that's an ongoing initiative. The same goes with what we have on securitization, where we also thought, especially when it comes to the rules in the regulation, transparency requirements, due diligence requirements, this is all valid, but sometimes going a little bit too far. And I think we have a good discussions here how we can make this fit for purpose for the future. And then we have, of course, two big initiatives I wanted to briefly mention. One is the package we will hopefully get through the College of Commissioners tomorrow, and the SIU, market integration and supervision. Okay, there has already been some informal text floating around. I don't know whether everybody had the time to read these 500 pages, but I can already tell you, once we will have a formally adopted text, that there is a couple of simplification elements also in this package when it comes to the area of market integration and supervision. And then indeed we have also the task, and this is a very responsible one, to do this report on banking in 2026. So for next year, we have actually also today in Brussels a very interesting workshop with at high level with our commissioner to collect ideas, what could be done, what should be done. And we are also very much looking forward to the findings we will get from the ECB, from the task force, to see, okay, what is it, what could be done in the end. And so there is really a lot happening. But I think this is good, because everybody has understood this is the moment now, and we are working to that together. Yeah, we sometimes have different views, but that's also what it should be. So all in all, I think there is a very strong momentum here.
Thank you, and very great to hear for the forthcoming package. Now we would take questions from the audience, and maybe I already see hands in the room, so we start with one question here in the room, and then we go to online participants with the link. So just a second when we get the mic. And could you present yourself?
Yeah, thank you very much for hosting this event here. I'm very glad to be part of it. My name is Karl-Peter Horstmann. I'm working for RW Supply and Trading, which is a trader in commodities and commodity derivatives in the EU and worldwide. We are dealing, I personally, with financial market regulation, and we are subject to different regulatory reporting regimes in the EU, MiFID, EMIR, in US, Dodd-Frank, in Asia. And therefore, we are a very strong supporter of your initiative here at ESMA to streamline and harmonize the reporting regime. Clearly, this will increase the competitiveness of Europe and our energy sector. Here comes my question, is obviously this is a big project taking several years until we will see, hopefully, a legislative proposal from the Commission on level 1 changes. However, we as an industry, we are very keen on quick wins, short-term changes, which will help us kind of immediately, meaning in the next 1 or 2 years. And one and two ideas is, for example, it becomes technical now, single-sided reporting, or then we do not want or need to report intergroup transactions across Europe. Currently, we need to get an approval across the EU from 20 and more regulators for this purpose, and that also could be simplified. And to give you a dimension of the burden in our firm alone, there are 12 people working on reporting worldwide. Thank you very much.
Thank you. Maybe Natasha, would you like to answer?
Sure. First, thanks for the comment. Thanks for the support. This is typically a comment that we did receive, and we are working on providing back. We're working on a cost-benefit analysis following the reporting responses that we have received to the call for evidence. This is one of the comments we have received, and we'll have to define the strategy going forward. So are we going, so in the consultation there were different options. Do we go for the most ambitious? Do we go just for quick wins? Do we do a combination? So we will be coming back to you first quarter 26. But what I think your intervention also illustrates is the actual cost. So being able also to quantify what this really means for a given company, those multiplications of requirements, I think that's very helpful for us, because we want to be able, the whole purpose of use of data, to quantify and to provide evidence supporting whatever decision we make. So thanks for your support and intervention. We'll be coming back to you on that.
Thank you. Now I would look my ESMA colleagues whether we have question online.
Yes, so we have a question from Quentin Van Liet from BNP, but we have received similar one on the same topic, actually from Anonymous. Could you elaborate how you can quantify the degree of simplification you aim to achieve, and whether concrete targets are being set for the next 2-3 years? For example, using a percentage of reduction in data fields or other type of metrics.
Thank you. And maybe I turn to Alexandra. Would you start with this? So concrete steps that you have planned.
I can start, but maybe, I don't know, Natasha or perhaps even also Claudia can add. And we have one very big political target that has been set by our Commission President, Mrs. von der Leyen, who says she wants to see a reduction in reporting obligations by 25%, and for smaller companies even more. And I think this is very much our guiding principle. But this is again on reporting obligations. So this is not, let's say, about other topics we were discussing this morning, and I think that makes it perhaps easier to understand how you reach this 25%, because you can say, okay, we have so many reporting lines and reporting obligations in legislation, and this is exactly now what we're doing to screen. Yeah, this is something we definitely need, but here is something we can perhaps live without it because the data are already there, or we can do it differently in the collection. So for us, I think this is very useful, and also I think gives a clear signal that we are serious with that. But there may be, let's say, at the ESMA side, things that are going a little bit more in the details. But all in all, I think for us, 25% is our clear benchmark.
Sorry, happy to come in briefly. And so under the control of all my colleagues who are in the room, I have a lot of my data experts here. I would say we don't have a concrete target per se, but mainly because we want to make sure we make a material impact. And therefore, maybe reducing some data fields would be nice. And then I can say, whoops, I've reduced by 10, 15, 20%. but it might be that the cost remains because you still have to have that system for reporting. So we are looking to make a material change, and we will be running a cost-benefit analysis for that. So there could be systems like maybe reporting less frequently, or maybe reporting through only one system instead of 3. That would be much more impactful for the market in terms of reducing cost than just reducing the data fields. We hear the target. For me, the indication from the President von der Leyen, it does give a level of ambition of the expectation. So saying 25%, 30%, okay, that tells us the magnitude of what the ask is, and we certainly want to have a material impact, but we will be looking really at the substance to have an effective impact in the market.
Thank you. And Claudia, would you like to react as well?
Yes, I fully agree with what Natasha just said. So, of course, you can have a long template with lots of details, no? And then you take out little elements, and then you maybe get the reduction, but the template is still there, and those who have to report, banks mostly in our case, still have to maintain that information. So we need to make sure that we also consider the fixed cost of having different reporting templates, that we have a streamlined IT infrastructure in terms of reporting to us. So all this needs to be taken into consideration. And this is also what we do when we look at our reporting work streams that I explained earlier. But then, of course, we have many other work streams where we want to streamline our procedures. And here again, I'm a strong believer in having clear indicators. So we will collect these indicators. We will also publish in our annual report. But we should be very careful that we don't just, for example, look at the speed with which we come to a certain conclusion. Of course, we can speed up everything, but then if we lose risks out of sight, we haven't gained a lot. No? So we always need to look at both how quickly, how streamlined can we do things, but also at the same time, do we still cover the risks that we should cover? And I think that's, again, in everybody's interest. I think financial stability is, in the end, it's very much in the interest of the financial system and the actors in the financial system as such. So indicators, yes, tracking what we're doing, but then we need to be careful how to analyze and what conclusions to draw from it.
Thank you. Now I think it's time to close our panel. I make some notes, 3 points. First, no deregulation, no de-supervision. This is a clear message from the panelists. The second one is self-confidence is needed in Europe. We can do it. And the third one, changes are on their way in the supervisory authorities and in the Commission. So work in progress. And with a positive note, I would like to end that together we can make it. So thank you for all the panelists for this morning session. And now we will continue with our program. So thank you all.
Thanks for the very good summary.
Thank you.
Thank you very much to our first panel and the panelists. I would invite our next speakers to join me here on stage. We have Andrew, we have Stefan. Please come forward. Feel free to take your seats. I will take advantage and the privilege of having access to the microphone and we'll make another small announcement, very much picking up at the last question that was asked about the cost benefit, the metrics, and how to quantify and assess eventually the reduced burden that we are collectively working here to achieve. As Natasha mentioned, we do have a cost-benefit analysis exercise that actually has already been launched. It is ongoing. Our aim is to deep dive into specific cost drivers that have been identified during the holistic review response. So rather than setting a matrix of number of decreased fields or number of decreased lines, we are trying to approach it from a little bit more scientific point of view. What are the key cost drivers? How can we quantify it? And then from there, see how to bring them down. So here comes the announcement. In our cost benefit, we are currently lacking representatives from the corporate sector. So not intermediaries, not financial market participants, but bigger or smaller corporate companies that are active on the financial markets as well by virtue of hedging, I don't know, by virtue of your FX trades. So if there are any volunteers who would like to contribute a little bit of time, meet our consultants, provide us input on how you are exposed to the reporting burden and where are your cost drivers, we're very much open to receive this interest. Feel free to, you have the email address from which we communicated with you, you have the team in the room, approach us today, but we still need a couple of companies that we could plug into this exercise and collect data. Now, closing this little remark, we are going to our second session of the day. And after having heard from the senior rule makers, policymakers, and supervisors, we now wanted to talk to the, or hear actually, from the market practitioners. Market practitioners who know, not from a theoretical point of view, but from very precise day-to-day challenges, I suspect, what actually regulatory reporting looks like, where that burden is located, and most importantly, hear the views and ideas, no matter how provocative perhaps, or controversial. That's the moment to share them, and that's what we'd like to explore. So we're gonna first give the floor to Andrew Bailey, who is joining us from ISDA, where he holds a post of Senior Director for Data and Reporting, and is particular covering the derivative reporting regimes within EMEA. And prior to that, Andrew was working on regulatory reporting change in a banking sector. And once Andrew shares his views, we're going to hear from Stéphane Giordano, who is joining us from Société Générale. And he also holds, he is a chairman of AMAFI, which I don't think requires introduction, but I will remind everyone that that is a representative body for financial market professionals and participants in security industry in France. And that is a position he has been holding for the last 11 years, going on 12. So would have seen as a minimum EMIR rewrite, MiFID II implementation, everything that was after that. So quite a lot of SFTR, quite a lot of experience on the topic. And Stéphane is also a member of the Markets Consultative Commission at the IMF, that's the French regulator. And he also sits on the Securities and Market Stakeholders group here at ESMA. So gentlemen, the floor is yours. Please make your remarks and introductions, and time permitting, we would see if we would also be able to take a couple of questions after each of you has made your remarks. Thank you.
Thank you, Olga. Normally, when people ask me what my job is, their eyes glaze over within a few seconds, and they start looking around the room. But with over 1,000 people registering for today's Day-to-Day, I feel like I'm with friends when it comes to reporting. So I'm going to say this is actually quite an exciting time, I think. This is the first opportunity we've had, certainly since the G20 meeting back in 2009, to take a proper strategic look at regulatory reporting. We can question why we're reporting, what data's needed, how it's being reported, and can we improve the quality? Can we improve the completeness of the data? So I think this is genuine an exciting time for us reporting geeks and nerds. I hope you don't take offense, but I think that's kind of what we are if we get excited by this. Working at a trade association, and I've been running the reporting working group for 7.5 years now, there is real collaboration amongst the industry to make reporting work. And throughout the process of reviewing the recent call for evidence, which ISDA responded to jointly with AFME, FIA and the GFXD, there was, without a doubt, over the sort of coming up to 8 years, 7.5, 8 years that I've been working at ISDA, that had the most interest, the most input, certainly the highest number of attendees. So there is a real willingness from market participants to make this work. So I think we've got to take this opportunity. Is essentially what I'm saying, because there's the industry want to work with the regulatory bodies here. They see this as a great opportunity to essentially reset the reporting regimes, make them truly efficient, make them truly effective, and make the data useful for everyone. There's obviously, I think, as we've already heard, multiple elements that need to be recognised and negotiated through in order to achieve the simplification. So let me start, I guess, with recognising that this is an opportunity, as I've just sort of touched on, to reassess what information is required for the purposes of each regime. The number of data points that are reported have increased over the years. some of those are absolutely needed. Regulators can and they do use the data that's received, but we do have to ask ourselves, what is the purpose of each regime? Carry out a pragmatic review. This is opportunity, a proper pragmatic review. What is the core data that's actually needed? It was mentioned earlier, actually. I think was it a third of the data isn't necessarily needed. I'm going to hang on to that quote. That was a very useful quote for me to. I'm sure it's not as simple as that, but there is definitely data which is absolutely vital, and some data which is perhaps not as key. And I think that is a good opportunity to have an honest reflection of what data is needed. Only collect the data that's needed and go out to the firms if required to get that additional data. There's going to be costs in any change, in any operational requirements. Mustn't make it disproportionate costs to the data that's actually used. So what I mean by that is the cost to actually submit that data to the regulator, is that data really only just a nice to have? Is it too expensive to actually report the data for the actual benefits of it? So and this is the kind of information that's going to come out through working with the industry as well, which has been talked about. Can the data be derived from other data points? Is the data already available from other sources? I'm thinking of things like OTC ISINs, UPIs, LEIs. If the data is already there, does it need to be reported again? These are ideas which have been reflected in the call for evidence, I'm happy to say, but just sort of driving home, these are topics which have been talked about in the industry for years. So it's great to be having this as an open discussion in forums like this. Also, is the data already available from other regimes? As been mentioned a few times. Report once and pass that data on. I mean, an example that's been talked about at the minute on some of the ISDA forums, but also, I'm sure, amongst many other forums, active account requirements. Many of those data points are already available under Article 9 of EMIR. Can that be reused? At the minute, there's brand new reporting that's required under AAR, but can that data be used elsewhere? All stakeholders are going to need to accept those changes, and that goes for the reporting entities and the regulators themselves. And that's probably saying something really obvious. You already know, I'm sure, that everyone's going to have to make changes, but it is fundamental. I think we have to understand that there's going to be costs and challenges that everyone, whether you're receiving the data, whether you're submitting the data, there are going to be costs and challenges. We need to accept that just because it's a challenge, it doesn't mean it shouldn't be done. However, proportionality, let's consider, is that change actually worth the cost in the first place? Olga just mentioned that ESMA are carrying out a cost-benefit analysis. As part of the call for evidence response, ISDA did carry out a mini cost-benefit analysis. We sent a questionnaire. We didn't have enough time to do it in great detail, but we sent a questionnaire to our members to get an idea of the simplification ideas that were put forward in the call for evidence, plus a few other ideas that had come up during the ISDA working group calls. We asked for feedback. What are the costs of implementing these changes? What will be the benefits of implementing it? And what are the actual costs today of operational costs for actually running reporting? So if I start with the operational costs, and I'm sure the ESMA call for cost-benefit analysis will go in deeper detail, but there are some big budgets out there for running reporting regimes. High-volume firms, unsurprisingly, have the highest operational budgets, but it's actually a lot less on a cost per transaction for the big firms. Alexandra actually mentioned on the previous panel that the Commission have identified that the costs for reporting are proportionately higher for smaller firms, and that's exactly what was reflected in the feedback we received from our questionnaire for both EMIR and MIFIR. The cost per transaction for the lower volume firms were up to 30 times higher than the big firms. So, that perhaps suggests that all entities have got to implement a minimum level of control and processes, whether they're reporting 5 trades a day or 5,000 or 500,000 trades. So that proportionality needs to be considered on any future changes, and I think it is already considered, but obviously it probably could be better, so that's a part of the discussion. The main cost drivers that came up, the top 3, anyway, I won't go through everything that came up. The frequency of reporting changes, and then lack of flexibility when changes need to be put in place. That was number 1. Dual-sided reporting, which hasn't been mentioned at all yet, but I can guarantee I'm going to mention it on this panel a little bit more. Dual-sided reporting came back. It was actually the reconciliation process was the big cost in the dual-sided part of it, so I'd like to touch on that as well. And duplicative reporting, again, that's come up a few times today. But they were the 3 big items. So, I don't think any surprises there. When it came to the biggest cost savings, single-sided came up as number 1. So again, it was the pairing and matching. So that alone, if that was to be removed, and I'm not saying that's a simple thing to do, but if that was to be removed, that would be a huge cost saving from the feedback we got. And I do acknowledge that moving to single-sided reporting has its own challenges. From a reporting entity's point of view, they would have to, there's processes in place, which party reports. You need to understand which party is going to report, so you don't not both reporting. There's still controls that you need to run. It doesn't come for free. There are, there's challenges with that. From the regulator's point of view, I know there's benefits and uses of dual-sided reporting, but I think there's ways around that as well. So again, challenges, as I said earlier, doesn't mean we should just rule it out. Another big cost-saving report once. So if we call back if we refer to the call for evidence in option 1A, there was the delineation. So OTCs go to EMIR, ETDs go to MIFIR, and SFTR stays as SFTR. Option 2A and 2B talked about bringing everything into one regime. Either way, it's reporting once. So as was mentioned in the previous panel, receive that data once and pass it along, share it internally amongst other regulatory bodies. That would be a huge saving as well. I would stress there was concerns from several, well, actually quite a lot of firms, when it came to the idea of reporting once. So all ETDs, for example, go to MIFIR. There was concern that would mean all of the EMIR fields would then be added to the MIFIR template, and vice versa, all the MIFIR fields would be added to the EMIR template. It become a superset. That's not what the call for evidence said, but there are concerns that if that happened, any benefits of reporting once would be heavily negated. So we should avoid having a superset of fields in any report. I guess that comes back to proportionality. So based on feedback that I've received from the industry, and that's via the working group calls, bilateral meetings, through the questionnaire I just mentioned, there's going to be some fundamental changes there are some fundamental changes that keep coming up to achieve simplification. None of these mean deregulation. I should stress that, and actually I think if they're done well, it actually leads to improved data reporting, more consistent, more accurate, more confidence and better accuracy. So I'm going to come back first of all to the duplication, duplicative reporting. So as Natasha already mentioned today, it's recognized that some data is being reported more than once. All the options really, option 1A and certainly both the options 2 talk about removing duplication. When it comes to duplication, you have duplication of data within a message. So I mentioned if you're reporting a UPI, for example, you shouldn't have to report those underlying elements again. If you're reporting a trade once to one regime, it shouldn't be reported again to another regime or multiple regimes. So that there's removing that duplication. It's not just about taking a few fields out, it's about taking entire reporting streams out wherever possible. The move to single-sided reporting, another big cost saving. So I appreciate one of the key aims of dual-sided reporting is to ensure data quality. If both sides are matching on their fields, then you can be pretty confident the data is going to be accurate. But with over 10 years of dual-sided reporting, we're still seeing fairly significant levels of matching breaks. I can guarantee I'm still talking about fields which we've been talking about since reporting first started, trying to work out. In fact, I sent you an email, Johnny, the other day. I'll look at some questions. So dual-sided reporting, it's not that it's broken, but there's got to be a better way. And I think that better way is, again, mentioned actually on the opening talk there by Verena Ross, is the use of technology, machine executable requirements. So if we can provide, we as an industry, because I think it has to be a mutualized effort, if we can provide fully ambiguous representation of reporting requirements in a digital form as machine executable code, then we're going to see huge benefits when it comes to the actual quality of data. This actually can be done regardless of any options that have been talked about in the call for evidence. It could even be done today. It could be, I think it could probably be published as level 3 guidance. In fact, it may even be best as level 3 guidance, because then you have that flexibility to update changes. If a new Q&A comes out, you can update reflect that Q&A as code immediately. So yeah, I was very happy to hear Verena Ross mention that technology will help to achieve that simplification, and there's a move towards digital reporting, because that's going to ensure consistency amongst reporting entities. It's going to improve the accuracy of reporting, so I think a much better solution compared to dual-sided reporting, enable quicker implementation of those rules in the future. We're talking a fairly big rewrite here from level 1 down to level 3, I imagine. but I bet it's not the last. So if we've got those rules in digital format, the next time it will be a lot quicker to make any future changes. The elephant in the room, I guess, is the implementation costs. I say there's going to be costs in everything that we're going to do, but longer term costs will be minimal. As I say, once you've got that representation centrally published and used by the industry, future changes will then be a very light touch. And it sets the foundation for fully automating or straight through reporting, whatever we want to call it. But it's a very manual process still. There's a lot of big operational teams managing reporting and implementing the change. If we have it as digital code, then the use of technology will really drive that as to a much more straight through process. And the good news is, there is already a model out there. I'm not going to sing and shout about the digital regulatory reporting, but it is being used, so it is proven. So I know if it's published centrally by a regulatory body, it's not going to be an ISDA model, but there is a template there and it does work. So this isn't a pipe dream that's perhaps 10 years in the future. It's something we can utilize today. And my little pitch, I guess, from an ISDA point of view, we would like to work with the regulators to make this actually happen and get to a state where the accuracy of data is fully recognized as pretty much being 100% all the time for those that are using that model. Now, as I say, there's challenges with all of that, and we're not getting into the details today. So there's going to be challenges, but there are some low-hanging fruit as well, actually, which is a question which came up. What can be done now? The call for evidence talks about a 5, 6, 7-year plan to implement these changes, but there are steps that can be taken now. Arguably, they already have been taken when the MiFID transaction reporting changes were put on hold. I think that's already a step that was hugely welcomed. But we can do more, right? You've got another thing that could be paused, and that we put it in our response. In April next year, we have another swathe of 60-odd fields that are going to be reconcilable under EMIR. Potentially that could be put on hold. That will give more time for people to focus on what actually could be improved. The working with the industry as well, a collaboration between the regulated and the regulators, I think, is absolutely fundamental. It's great to hear that that's been talked about as one of the fundamental parts of the ongoing process. This isn't going to be the regulator disappearing into a room and coming back in 5 years to tell us here it all is. It's going to be an ongoing process. There's going to be more day-to-days, which is fantastic to hear, and it won't just be an annual event either. There's going to be events going on or discussions going on throughout the whole year and beyond. So let me just wrap up. Firstly, again, to thank ESMA for putting this day-to-day on and getting everyone here to talk about these really, really important issues. Genuinely, I think it is an exciting time. There is huge support from the industry. Yes, there'll be challenges. Yes, there'll be costs. But I think all stakeholders, the regulated and the regulator, really do want to make a difference here to make reporting better, more efficient and more accurate, and shape the way that reporting is going to be in the next 10 to 20 years. So this is an opportunity, as was mentioned, for Europe to really be bold, take the lead here globally, and I think this is a great opportunity that we've all got to take. Thank you. Over to you, Stefan.
Thank you very much. Needless to say that I agree with what Andrew just said. And first, I would like to thank ESMA for organizing that day and giving the opportunity to discuss on that very important topic. I've prepared some slides. I will keep short, obviously. I will start, and I'll try obviously not to repeat what Andrew already said. I will try to propose sometimes another angle. I will start with general considerations, then give some kind of a state of the art before coming to proposals. First, on general considerations, I prefer personally the term burden reduction to simplification, because I think that it's a better way to express the fact that there are two levels of burden reduction. The first burden reduction is about simplification. It's about finding the best trajectory to achieve given objectives with the minimum energy. So that's about tactics. And it's really important because poor tactics can ruin your strategy. But you have another layer of burden reduction that has to be taken into account. And this is also about setting the objectives and questioning the objectives. And I know and I understand from the previous panel that this is not consensual. But typically, there is something about how do you integrate competitiveness and growth and attractiveness of the European market into your objectives. And this, I believe, is really a critical aspect of things. The second general consideration is about the international context. We cannot, as Europeans from the European Union, work in isolation. We have to take into account the international context, especially we need to look at what is happening in the UK. And the FCA recently launched a consultation that is aimed at making the reporting burden in the UK lighter. And they have very bold proposals there in terms of limiting the number of reporting fields, in terms of having leaner data requirement, in terms of reducing the instrument universe, in terms also reducing the back reporting period from 5 years typically to 3 years. And moving to a conditional single-side logic for reporting. So all that is something that has to be taken into account in the approach in the EU. So this being reminded, what is the level of state? Well, talking about reporting of financial data in the EU, we have to take into account the fact that we're talking about 3 different regulatory frameworks that have been defined with different objectives. The first was EMIR, and EMIR was built as clearly a consequence of the financial crisis, with the aim to monitor and control risks, and was clearly focused on the derivative market. The principle of EMIR is to report to a trade repository registered with ESMA. Then you've got MiFIR, and MiFIR as a successor of MiFID aims at ensuring market integrity and help to fight market abuse. Here, reporting is due directly to the NCAs and can be done through APAs, so approved, reporting mechanisms. Last, SFTR was defined in 2020 with an objective clearly defined at securities financing transactions. And here again, it is to be reported to ESMA through a trade repository. So what we see here is that we have a framework that was built layer by layer with no clear overall vision. There are duplications between these reporting mechanisms. So typically, exchange-traded derivatives. Transactions are reported both through MiFIR and through EMIR, and this translates into significant costs. The estimate in 2019 was that the costs were in terms of billions each year. Then we had obviously the draft review on MIFIR. I won't say anything about the review of EMIR. Andrew already developed that, but the draft review of MIFIR, it's interesting to keep in mind that the review of RTS 20 basically was proposing almost a doubling of the number of reporting fields, and with duplications of fields already reported elsewhere, and especially under EMIR and SFTR, which would have led to a disproportionate burden with, again, no clear objective. And I will come back on that. It's important to set the objectives first and then define the best trajectory to get there. The call for evidence in that perspective was quite welcome, as it also came with a suspension of the review of MIFIR RTS, and in line with the objective that was reminded earlier today of reducing administrative burden by 25 to 35%. So I think that the industry particularly appreciated the fact that the call for evidence proposed a phased approach with different scenery, and I will keep short on that. But it's really important to have that notion of phasing in the approach to find the most effective way to reduce the burden while achieving the objectives. So now, how can we simplify and how can we implement that shared intention of simplifying the reporting? First thing is to adopt a certain number of guiding principles. The first one is about eliminating redundancies between reportings and reducing complexity of reporting. To do that, there is a need to make sure that only what is needed is reported, and that there are clear cost benefits and analysis associated with any data that is required. The second aspect of things is that we need to ensure that we reduce the frequency of changes. As was mentioned by Andrew, it is clear and obvious for the industry that simplifying the reporting won't be simple and won't come without costs. And hence why we must make sure that we define an objective that ideally we will be able to keep unchanged for sufficient time. And that probably requires a clarification of the articulation between the different levels of legislation and regulation to limit future inflation in demands. The second important principle for simplification will be to have a phased approach. We probably need first to define the long-term objective. And the long-term objective is to have a single reporting to a single place that will be also a single place of query for data users. In our view, we believe that ESMA is best placed to ensure that role of a single place of reporting, while part of the supervision will be done by NCAs, and we understand that this is a principle that should be found in the market integration package to be published tomorrow. An important aspect also of things is that the use of intermediaries should be made optional. And that will be an important aspect, I will come back on that, of cost limitation. On the short term, we need to have some quick wins where we can, and there are many quick wins basically that were identified by the industry with an ability to implement by 1 or 2 years. So typically that would be about removing exchange traded derivatives from EMIR reporting. That would be about excluding SFTs with central banks from MiFIR reporting, reducing reconciliation fields under EMIR and SFTR, removing low-value FERDS obligation for systematic internalizers, and so on and so forth. So I won't detail all that, but there are some ways to move quickly here, and it's important because it will create also it will create the goodwill that we collectively need to move forward effectively on that project. On costs, single reporting will generate structural savings for the industry. The elimination of duplication, we estimate that savings can be in the region of 20 to 25% of current reporting costs. And when it comes to the role of intermediaries, obviously it depends on the size of the entities that have to report, but we estimate that it can be up to 50% of current EMIR and SFTR costs for institutions. So I will stop here, and I will just let you see that list of short-term simplifications measures that have been proposed.
Thank you very much. Thank you, Andrew. Thank you, Stefan. And thank you also for being so very much on time. Much appreciated as well. That does allow us actually a minute or two, should there be a question. We could easily take it. Is there anyone in the room who would like to reflect? You've just heard a very effective summary of the ISDA's position in response to the call for evidence, so you don't need to read. It is available online, but that was indeed a very concise and very clear view, as well as very clear proposals summarized in the Stefan's slide. And these are exactly the kind of input we very much welcome at this stage. There was a lot said over the years about the importance of standardization, about the importance of alignment, avoidance of duplication. However, we are where we are after all those conversations taking place for the last 10 years. It's the moment to actually speak about concrete actions and very concrete proposals. Doesn't mean that each of those proposals could easily be implemented or is equally acceptable to all community who is involved in the discussion, the regulators, the reporting parties, but the concrete proposals with concrete examples is something that is particularly helpful at this moment. So last call for a question, if there is any. I think we have something coming from online.
Yes, we have one question online asking what proportion of data that is reported to regulators is actually already routinely used in firms' internal processes for risk management and other purposes.
That's a good one. Thank you for the question. Would anyone give it a try?
Well, I have no idea the actual proportion. I think there was an idea when reporting first started that everyone's a winner. I'm not from a reporting firm, so I couldn't tell you for sure. I think firms are using reporting more than they probably did at the beginning, but it's still not a full win-win situation, which I think was the initial aim. You know, firms can use the data they're reporting for their own purposes. It will be interesting to get that information. Whoever asked it, I think that would be a very useful, for firms to actually say, well, if we're spending all this money on reporting, how can we use it better? But I'm not sure anyone really has that figure, but that's a very good question, a very pertinent question.
Yes, I could not agree more. First, it's not an information that we have as of today. Secondly, it would be needed to have that information. And probably when assessing the relevance of asking this or that data, it would be good to ask firms if they already use the data and for what purpose, with some kind of a code of importance. Meaning, is that used for compliance reason? Is that used for risk monitoring and that kind of stuff? Just to ensure that regulation and practitioners work on the same on the same logics.
Thank you very much. Thank you for that. And we thank our speakers for this session. Thank you, gentlemen. And that brings us to the first break of the day. We're now going to break for the next 20 minutes. There are some refreshments available at the end of the room in the open space, some tea and coffee. And I invite everyone to be back here 10 to 12 for the next panel of the day. See you shortly.
Ok, test, essai, essai, essai. Là, j'entends des deux côtés, c'est mon côté. Voilà. 1, 2, 1, 2, test. 1, 2, test. 1, 2, test. Test. C'est bon? T'as les deux oreilles? Ok. Ici sonorisation, 1, 2, test, test, sonorisation, essai, 1, 2, 3, 4, 5, 6. Ok.
Thank you, Karim, and thank you everyone for respecting the time. I will ask our next panel to join us on the stage. Please take your seats. I will give the floor to Nikolai in a second. To introduce the panelists, yes, please, in the meantime, for the meeting room, there are a few free spots available at the beginning. If you are hiding too far away in the back and you would like to join us closer in the front, please do so. So our next panel, we've asked our experts, to explore the simplification in practice. Basically share the concrete ideas or observations on either the initiatives they might have observed taking place at national level that have paid off and indeed delivered on the objective on simplification, or maybe the practices and experience that are being observed in other jurisdictions outside the EU. After all, there is no better way of inventing a bicycle than copying it from someone else who already did it. So I'm going to give a floor to Nicolas to introduce his panel, but a few words about Nicolas himself. So we have Nicolas Veron, who is a senior fellow at Bruegel, and his work is focused and primarily specializes on the financial systems and financial reform. His research includes global financial regulatory initiatives, financial sector policy in the European Union, and selected developments in other jurisdictions. Nicolas, the floor to you.
Thank you so much. Actually, that introduction is incomplete. Normally, I don't talk about myself, but in this particular case, not only do I also work at the Peterson Institute, which is written here, but I'm hopelessly conflicted, so I don't know why ESMA invited me here. I've been for many years, and still am, an independent non-executive director at the trade repository arm of DTCC. They call it Repository and Derivative Services. That includes an Irish entity which is supervised by ESMA. So I'm completely deep into special interests here. Having said that, as you know, DTCC is run on a non-profit basis, so I'm marginally less conflicted than if it was a for-profit operation, but still very much so. So you should keep that in mind. Also, I'm not neutral in the debate because I've been a long-standing advocate of reinforcing ESMA as an integrated, actually a single supervisor. I published a little book this year on this very issue, which is available for free on google.org. And that means I'm not neutral in the debate, especially about turf allocation between the different authorities in Europe, which makes me completely unqualified to moderate this panel. With that, I'm very happy to introduce our four speakers in the order in which I will ask them to give initial remarks. Joachim Kuhnen is legal counsel for operations and depository division at DZ Bank. He had an early career in consulting and banking and joined DZ in 2007. Actually, the common thread of this panel is that we have veterans on the panel. I think the kind of most recent tenure on the panel is Christophe, who joined the AMF in 2010, 15 years ago. And some of them have come and gone, to some, seeking adventures outside of their current employers. But generally, they have a lot of experience in respective departments. So as I said, Joachim joined DZ Bank in 2007. Lucas joined ICE in 2004. Rosa joined FESE in 2007. Christophe joined IMF in 2010. So that's quite impressive. Lucas Schmeders is president of ICE Index. ICE Index, of course, DZ Bank is the central entity of the German cooperative financial group. So you can think of it as a core of a network, which is one of the biggest banking networks in Europe. It's not a consolidated group, but it's a big banking network. I've learned that. It has a thing called an institutional protection scheme, which is an endless source of wonderment and fascination for me as a banking analyst. Lucas Schmeders is, as I said, the president of ICE Index. That's an energy derivatives exchange, a leading one. You know them from the TTF price reference for natural gas, which is kind of a global reference in the market. They also run a leading carbon market based on the European Union's trading scheme, ETS. Rosa Amesto is the director of FESE. As I said, she's been there for 18 years. For 3 years, I think you were in insurance or investment Europe. But still, I mean, that's a lot of experience with Securities Exchange. And Christophe Bonnet is the deputy head of the Data and Surveillance Department at AMF, the French Securities Commission. He had an early career in banking, and as I already said twice, he joined in 2010. So, with that, Joachim, tell us, I'll ask, actually tell us whatever you want to tell us. I'll ask the panelists to make very brief introductory statements. Please stick with the time discipline, and we'll take it from there in our conversation. Thank you. Probably if you wait a minute, they make it work.
Okay, first of all, thanks very much for having me. I feel honored to speak at this conference, and I think it's a great opportunity for the market, for the reporting ecosystem that ESMA and other regulators are thinking thoroughly about changes that have to be made to make this system better and more efficient. That said, topics I may raise here must not necessarily be the view of my company. Nevertheless, I try to stick on what I've agreed with several parties I was speaking to in front of this panel. After having heard already 2 rounds in this meeting, it's sometimes difficult to not repeat the key words that they have used. So I'm trying to, change a little bit.
Skip the repetition. We already heard it.
So I'm not calling them guiding principles. I'm going to call them meta-level principles. And even so we are talking about national-level topics. I would also like to talk about European-level topics, which I think are of utmost importance here as well. Having said that, I think on national level, any failure to data quality have to be regulated, like offenses, infringements, etc., like penalty payments, etc. There is a proven system that might be different over the national entities, over the countries in the European Union, but I think it works good, so it should stay like this. And having said that, on EU level, the data quality and the data availability should be that which is regulated over there, because all we need is a legal and regulatory convergence, and we have to maintain a consistent and efficient, effective union law framework. I think this is very important. Having said that, I was digging deep to find at least 2 principles that should be done on national level. So first and foremost, I think that any notification in case of misreporting should be done on the national level, and it should be done principle-based and not rule-based. So principle-based means what is done under MiFIR right now, and rule-based is what is done under EMIR REFIT right now. And I think the EMIR REFIT rules are much too complicated. They are over-administrative, and they don't lead to really good results. So I think this should be rewinded, and there should be a principle-based approach on the consolidated reporting regime. Second is that I've spoken to BaFin in front of this panel, and they have strong interest in keeping, for example, CCP's reporting under MiFIR. I will not elaborate too much on that here, but later on when I talk about the source approach that we would like to bring forward, I'm going to touch upon that later. And I said that on EU level, data availability is very important. So when I say that, I'm talking about working day. So we have to report T+1 after conclusion, modification, termination, or an execution of a financial instrument. But what is a working day? Is that a working day in Germany? Is it a working day in one of the 16 federal states in Germany? What is it?
Do you mean Germans work more or less than others?
Well, I was actually thinking about showing a calendar of the European Union, showing working days, showing holidays, and showing holidays that are unique. And I would think that would be very interesting to see, because T+1 doesn't mean T+1 for everybody. So it's always the regulators maybe waiting for the holistic view on the market, because one is reporting on that day, the other on this day. Why are we not going to target? I mean, I heard already everybody has to get out of the comfort zone and has to make steps, get off the ivory tower, etc. So why not going to target?
That was very thought-provoking. Lucas.
Yes. Well, first of all, very supportive of the Commission's agenda for simplification and burden reduction. Second, really encouraged by how seriously ESMA is taking this agenda on. For me, there are 3 points I would like to make in relation to data and simplification. First one is that data reporting is very important. It's not just a fringe process. It's not just burden. If you look at data reporting today, at least for the energy exchange traded derivatives, we talk about massive amounts of data to be reported near real time, and it's often very market sensitive. So organizing those reporting streams is a very delicate process, and it's a process that taps on to the same resources we would, for instance, use for business development or innovation. And those are scarce resources. So I do think it deserves consideration to think about what data should be reported. How should it be reported? And how often do we change the arrangements for reporting? That brings me to the second point. Simplification does not immediately mean burden reduction. If we move towards a simpler model, then we can see long-term benefits in lesser burden. But near-term, because of the investment we need to make in the changes, probably the burden for the industry will increase. That doesn't mean we shouldn't be doing it, but we should be mindful of it. Having said that, that doesn't mean that there is low-hanging fruit, and we should absolutely go about, identify it, and embrace those opportunities to make immediate improvements. The third point is that simplification is not a zero-sum game. There's plenty of opportunity to simplify and yet create a stronger regulatory framework. Thank you.
That was crisp. Rosa.
Thank you so much, Nicolas. And first I want to thank ESMA for having invited the Federation of European Securities Exchanges into this very interesting debate. So Lucas is one of my members, so I would like also to bring the common view of the community.
That means there is a common view.
There is a common view in many things. This is one. So, commending ESMA for the work on the simplification and burden reduction. I very much like as well earlier in the day today the comments made by Alexander Juresberg on competitiveness. So I think it's also important to place this debate on where we're going to go. FESE was and is very much invested in anything to do with financial transaction reporting. We gave our input to the call for evidence. And we tried in a common way to respond to claims about duplication, overlapping, and anything that is inconsistent, so that can be facilitated with a thorough exercise of simplification. For instance, if not addressed, these type of events could bring to higher cost, but also operational efficiencies. But as Lucas was saying, the approach is prudency, meaning that it's not to rush very quickly on, okay, there is a window to simplify, to try to reduce burden requirements. Let's just go into it. It is very important to get targeted and effective changes. And for 3 reasons, I will be brief on that. The first is to compare with other jurisdictions. We are living in a global stage. We are discussing everywhere with the Savings and Investments Union and the package that tomorrow will be out on how to become more competitive, right? And this is vis-a-vis the others. Second, very important to assess the situation today, but with a view of where we want to go tomorrow. Because sometimes, and I will elaborate on that later in the panel discussion, there have been instances of simplification that, in our view, did not consider thoroughly potential future implications. So it's important to have this two sides mindset. And the third will be to balance this exercise. High quality data remains critical, remains very important. As market operators, we stand very strong on that, on the high quality, but equally reliability of the data. So this is just to conclude that some sort of prudency is also very much advised. Thank you.
Christophe, supervisors are also practitioners.
I'm not a practitioner of the microphone. Thank you. Yes, no, it should be working, but the green light was. Well, thank you. Actually, once again, as my colleagues, I'm really happy to be here. Maybe on this panel, I'm the only stakeholder representing the people using this data. So at first, I wanted to tell you all, we're talking a lot about cost, but it has brought a lot of value to regulators in the last year. So I can also assure you all that the value has been there for us. But I think that if I remember Stefan's presentation, for instance, in the last, I joined the IMF in 2010. EMIR was launched in 2014, but the text was 2012, and it seems like we spent the last, I'm looking at Fabrizio also, the last 15 years implementing reporting frameworks, preparing for the next reporting framework, moving to refit of existing reporting frameworks. And I think now we have clearly a momentum where we bring all people in the same room and say, okay, let's take a pause and take a look at what could be very efficient. And I think we are now on a page which is quite similar between, accepting the fact that, okay, this reporting is needed, but we have to have high quality data, reliable data, etc. How can we do it? And I think there's a momentum to make this pause, and also maybe it was mentioned this morning, maybe to change somehow the method we've had that I think has proved also difficult to implement, the fact that we have this level 1 text and then try to implement the level 2 text, and then sometimes, we take a look, there wasn't enough time to implement it properly, so it's cost to implement, and then it's cost to make it sure that the data is of quality because we implement it too fast, etc. So I think all of this consideration, the fact, I don't know if it's the fact that we are some sort of veterans, as you mentioned, Nicolas, so we have experience on it, and I'm sure that now I can feel this momentum of all the people wanting to make it better in the near future.
So you, Christophe, you just said you're the ones using it. That raises an obvious question to the private sector participants, and especially to maybe Joachim and Lucas as people who are directly involved in individual companies. Is this data that you report useless for you guys as businesses? How do you look at that, Joachim? Your body language says yes.
You can get philosophic on that actually, because the data is used by the regulators to see how the industry is doing, where risks may pile up, and how, for example, the German market is doing in comparison to other markets, maybe within the EU or supranational.
But that means concretely
that would mean an indirect.
But the fact that you have to report the data to format it with all the data elements, etc., has not added any value business-wise in your experience?
The question is, I could answer in different ways. Let's put it like that. As the central bank of the German credit cooperatives, we have the subsidiary principle. So the local banks, and that's more than 700, they can decide whether they ramp up an own regulatory reporting regime or whether they do delegate it to us.
So how many do what?
Which is allowed, and yeah, they all delegate to us.
Without exception?
Without exception.
Okay.
Exactly. So that would mean that we have a small reporting business running. I would call it a startup because it's working since the inception of EMIR, more or less relentless on what comes, on what is changed, on all the levels. Is it cost effective? No, maybe not. Nevertheless, this is not the idea of a credit cooperative. So we don't have to be necessarily business driven in all our activities. Yeah? There is lots that central banks can do, such as the Z Bank, that do not have necessarily a positive outcome. Is that?
I think I have to translate central bank from German, and that means the central entity of the group, of course. But that's the only qualification I would bring. Lucas, is the reporting useless from a business perspective?
So I think the original question was, is it data that provides us with additional insights? And I don't think that's the case. It's the very data we would be using and operating to, for instance, run and supervise the markets from an exchange perspective. So that in and of itself is not the issue. The issue is that that data needs to make it under a certain standard to a different place, in this case, a supervisor or multiple supervisors, or in multiple ways under multiple arrangements to multiple repositories from an exchange perspective, but also from a market participant perspective. And that means that the inefficiency of organizing that flow of data towards ultimately competent authorities in this way makes it just very inefficient and produces an unnecessary burden for markets to operate in Europe.
What is your space? Are you EMIR only, or do you also have MiFID or SFTR in your scope?
So the exchange traded derivatives we operate are in the energy space. So we focus the financial regulation.
So you're MiFID.
MiFID, EMIR, but then also REMIT.
Right.
The funny thing with gas and power derivatives is that they are covered by two sets of regulation: financial regulation and energy regulation.
Oh, that's right.
And that means we have, apart from the number of times you can count within the financial regulation, we have double regulatory requirements, we have double reporting requirements, we have double supervisory frameworks. And to give you an example, an energy transaction gets reported 5 times under different arrangements in different formats, and that makes it less efficient. 2 problems. 1 is the burden for the industry. 2 is it makes it more difficult for the supervisors to actually consume that data, work with the data, and do the proper analysis.
I've already demonstrated that I was unqualified to moderate this for a third reason. So first, I have this DTCC affiliation. Second, I'm not neutral in the debate about supervisory authority allocation. And third, this is a practitioners panel, and I'm not a practitioner even after all those years on the board of the trade repository. So I will continue asking stupid questions. Christoph, one thing that has struck me in the journey, so I, to the extent I know something, I know much more about EMIR and to an extent SFTRs and about the MiFID, MiFIR space. In the EMIR journey, which started some time ago, one thing that has struck me is that it started as a global mandate, right? There was this idea that we would have global aggregation of data that would help, spot risk in the system for financial stability authorities. am I right to say this promise has been entirely not delivered upon?
Well, the entirely adjective, maybe I wouldn't agree on it.
So how would you qualify the assessment?
But the global mandate, which was international, definitely we've come to different regulation in different jurisdictions which are not compatible enough to provide for a global view on derivatives. But I would still say that the level of information we gather from EMIR has proven quite efficient to, I mean, I would love to come back to the previous question also. The fact that it's been a journey from firms being stuck in a crisis around derivatives to making sure that internally they have the right process for this kind of crisis not to happen again, and at the same time provide.
Do we have that now?
Well, at least I guess the same. You know, the how would you say the strike doesn't never strike at the twice at the same time. I don't know if that translates well, but I think you understood. The situation in the derivatives industry, it's much better than it was at the time, that's for sure. I'm still a bit puzzled on the fact that when we started writing this regulation, there was some sort of defiance because of the crisis between regulators and the industry. And so we came to a situation where legislators and regulators decided on the basis of the G7 mandate design quite precisely what we wanted as a fields, transaction, etc. And I would work just before in a risk management from a French CIB, and that struck me to say it's a bit strange because yes, there was a crisis. Maybe you could feel that some firms didn't manage their risk very well, but they've done some work and they know how to manage their risk. I mean, they know better than us. So maybe we should try and ask them the information they need to manage their risk, so that this kind of split that was mentioned in your last question, and that was the last question of the previous panel, of is the information we ask you, are you using it for business purposes? Actually, nobody said really no, but I think that's what I heard anyway. And I think it reverses. Why at some point did we ask for so many information that wasn't used? And maybe sometimes it was right to ask because we wanted firms to make sure they were able to provide this kind of information, or maybe we knew that the top 10% of the firms were able to do so and it would be valuable for the other 90% to be able to do so. But I think we missed some opportunities to make sure that we also hear from firms what they use in their day-to-day operation. And if they use it, most probably it's because it's useful, and maybe that's the kind of information we should use.
Rosa, I'd like to ask you about a concern which I think is very salient for ESMA, for good reason, which is data quality. In the journey of EMIR, again, the one I know best, we've had something of a journey on that. I'm looking at Fabrizio, he remembers episodes. Where are we in this journey? From the standpoint of a federation that encompasses all the key players in Europe, do you think we have done, 10%, 20%, 30%? Where are we in terms of fixing the data quality problems?
Well, that's a good question. Data quality, I mean, depends from where we look at that, right? If I take the angle of trading venues as market operators, I think there are no issues on data quality per se, right? Obviously depends on which asset class we're looking at, etc. But we have never been put under the spotlight on that. Maybe just one comment before moving into equity. I wanted to reflect on one thing that Lucas mentioned earlier on the derivatives front, right? On the data and the duplicative frameworks, because I think it's important to take also the view of the principle of report once. So I will come back to your question, but I think this is very important to kind of stress and complement. I think it's quite interesting to see that derivatives, in the case of energy, are under 3 legislative frameworks. We really need to make it work from the sending and the receiving end. So that's why that point vis-a-vis the ETDs and OTC is very important. Back to your question on the data quality. I think a lot needs to be done on the equity side. Still, things are going in the right direction. So we see that now ESMA will continue working along these lines on really try to strengthen the data quality. But again, goes back equally on reflecting what is important to request to certain market players, so to be able to do the good analysis once the data is collected. So I think the data quality also comes on, okay, what it is needed, and then through different means, obtain that data so that is comparable, meaningful, and hopefully allows to reach the good conclusions.
Any other views on the data quality challenge? Maybe Christophe? Have we made progress?
Thank you. We made a lot of progress. Honestly, that's something we can also share today with everyone and praise them for their efforts. I will say it again. I've been joining the AMF in 2010, and honestly, in 15 years, there's been a lot of progress. Maybe one thing I would like to point. And I think it was true. If we go to the reporting of platforms, it's usually good because you know they report to us this same kind of data. They report to their members. It's usually mostly aligned. The difficulties we have, and we will have to find the right solution, is that for market abuse purposes, for instance, we need to have the identity of the client, and the platforms, they don't have the identity of the client. So we've put a lot of energy when MiFIR started, and now it's very satisfactory to make sure that when investment firms A traded on a platform, not knowing they are trading with investment firm B, we have the right transaction reporting from investment firm A and B. You understood that, but to have the right identity of the client. And it became a bit tricky because, for instance, reporting to the regulators for investment firm and investment firm B, the right identification of the trade, this is not something they would use internally, the ID of the trade coming from the platform. So they had to make sure it was back in the reporting. But once you've done that, it's pretty today it made a lot of difference, and we are very confident that we are able to understand platform transaction from platforms because of the work they provide to their members.
I'd like to ask both Joachim and Lucas, as people who are again in the business of running a firm, what's been the journey with one particular element that I'm interested in, so special interest, is global, the legal entity identifier. Is the scope of using LEI in EU regulation currently sufficient, right, excessive? How do you see the promise of that tool? Of course, Joachim, you're maybe less invested in the kind of global connectivity side of this because DataSet is mostly in Germany, but why don't we start with you and then maybe move to Lucas?
Yeah, I would say the LEI is one of the identifiers that we can talk about here, and the way they are used. So are the identifier used in the best way? I wouldn't say no, because all identifiers have intrinsic data. So if you go to the GLIVE database, you enter a lie and you get lots of information. So I'm asking, why do we have to report which is intrinsic in a lie? So is the best use made of the lie? No. You can go to ISIN. Is the best use made of the ISIN? No, because there is intrinsic data as well. And still, there need to be fields reported which are associated with the ISIN. You can go to CFI, you can go to UPI, you can go to all the identifiers that have intrinsic information which does not have to be reported again on top, because it's not necessary. It's just simply redundant. So this is part of the source-based approach that we are promoting. So if there is data centrally available, why don't you get it? I mean, presently, we go to Clive, get the data, enrich it with other information, which is intrinsic as well. Then we report it back to the trade repository, goes to ESMA, etc. Why doesn't ESMA go to the Clive, for example? So then the whole, you know, back and forth and adding data which is redundant is done. So that will be a great relief to industry. You could think about that, for example. Then you have another source-based approach, and I'm looking to the left. So with trading venues, they have lots of data. They have lots of data, and I just heard they have good data quality. So why not make use of them? Instead, we get their data, enrich it, and send it back. And then it's double-checked against the data of the stock exchange or the trading venue, whether we're correct. I don't understand it. Maybe somebody else does, but I don't. So CCPs, for example, they have position-level data. Why don't you make use of it? Instead, you get the data from the CCP, put it in your data flow, enrich it, send it back, and then it's, again, checked against the CCP data. The clearing members, like DZ Bank is clearing members for lots of local credit cooperatives. We have data. We can use it. There is no need for the local banks to report data which is in our system absolutely accurate and fine. So I don't see any sense in that. So I mean, data reporting should be done by the party that has the operational control and direct access to the data. And then they should report once. And I'm quoting Natasha, who said in the morning, all these sources should be used. Yeah, sure. By reporting once. If these sources report once, or if they, or if ESMA is getting data from them, that will be reporting once. And Andrew said earlier, all stakeholders have to make changes, and there is no comfort zone, no ivory tower, no anything. Every option is on the table. So here are some ideas.
So, Lucas, Joachim obviously pivoted from my question to a much broader issue, and that was great. But back to the LEI. Are we using the LEI infrastructure the way we should in Europe, or is that too much, too little?
Yeah, I don't have a strong opinion on the LEI as such. It seems to do the job for us. The biggest problem I see with the LEI is that Acer doesn't accept it as an identifier. Acer has come up with their own identifiers.
Acer is electricity.
Acer is the European energy regulator,
right.
From a market supervision or surveillance perspective. They don't accept LEIs. They've come up with their own identifier called an Acer code, which then provides yet another barrier.
That sounds completely ridiculous.
I leave those words to you, but there's definitely room for improvement over that. Yeah.
Why don't we open it up to the floor? We're already, time flies. As I said, I'm not a practitioner, I'm clueless, but there are lots of practitioners who are not clueless in the room, so please don't be shy. Raise your hand, identify yourself, try to pretend you're asking a question. Yes, we have one at the end of the room. Over there. Oh, you need a mic.
Hi, Corrado Camera, investment company Institute. We are an association representing asset managers with a global footprint. it's a kind of a question, but more of a comment. I wanted to respond to.
So you're not even pretending, but that's fine. Make it brief.
About you asked the panelists about whether they use or not the data that they provide. The ICI as an institute, we have a lot of researchers that do like to use data, and unfortunately in Europe the data that is collected is not really publicly available, and I was wondering if so we would find it useful. We would find as an association of asset managers who our members provide data to national competent authorities, ESMA, ECB, and so forth. What we lack is the ability to use that data holistically, and I was wondering if you or the officials in official sector in the room are considering, as they think about simplification and harmonization of the data collection mechanisms in Europe, ways to make it to make public access, obviously with the appropriate safeguards and time delays to anonymize the trades and all of that, of course, like Nport in the US or other such systems. Thank you.
Actually, it was a question. Any others? Let's take a few, if there are any. If not, I'll direct that one to Christophe.
Yes, it's a very good question. Maybe I will have two sort of answers. Actually, this is something we have contemplated in the past, and it proved difficult to implement, unfortunately, because we would have thought it would be very valuable. So I think in some cases we were able, in a very restricted zone, to work with researchers, etc., on a specific data, but providing the industry with data we gather. I wouldn't quote a specific sort of data, but we had issue with one of the provider of data, even with anonymization, etc. It's not always easy to anonymize financial data, because you have sometimes very big players that even if you anonymize, you can know who they are. So it's very sensitive. The other part is maybe the CTP, which hopefully will also bring some sort of transparency that were not so easy to get in the last years, and maybe it would prove also useful for asset managers. But on the part of making data available to researchers, etc., maybe this is something we could work on with ESMA also, because I think this is something that we've all thought about, but made it difficult.
So my understanding, and it was implicit in Corrado's question, is that in the US there is more such public availability. Is that correct?
Well, at least from what I know, I mean, there's a CTP working for years, so this is something that we've took,
So why is it that there are things that they can do in the US that we cannot do in Europe in terms of making that data available?
Well, at least it's in the regulation for years. It hasn't worked for various reasons. It's been, it's for instance, the existence of a consolidated tape has been in MiFIR regulation with the review of MiFIR, so
right.
2017. It didn't work for some reasons, for various reasons.
Why?
We're going to make it work. It didn't work because I think the way it was designed, the business model couldn't really be found to make it sure that the people implementing this were going to make, at least maybe not make money, but at least make sure that they don't lose money on it. So I think it to be redesigned in order for it to work. We have to give it a chance to the product, I would say, and hopefully we will align. But this is something we've heard from many firms from the buy side for years saying, and it's also something that's seen as a one out of many differences with the US market, which is proving I mean, a place where European market could improve, at least.
Rosa, is there something you'd like to comment on?
Sure, and I want to elaborate on what Christoph has been saying, because as you rightly pointed out, the consolidated tape notion has been there for many years, so it's not at all the first time. However, what is different now is that very soon, and probably I would say next year, we will have a consolidated tape live in the European Union, showing this information from a public point of view in the sense of accessing and bringing that visibility. And exchanges in that regard have done a very long journey, and to the point today that they have embarked in a joint venture. So far, it's the only one that is publicly known, EuroCTP, and let's see what will be the results of the call for tender, but the tape is coming already next year. And this is gonna bring visibility, it's gonna be one single point of information, clearly on post-trade, but also on certain instances in pre-trade, so to be able to have this common view and the comparability. And that's why, relating to your question earlier on the data quality is so important, to be able to compare pairs with pairs, because otherwise we will have something, and this is why the tape, through trade flags, hopefully will provide that solution.
I'm tempted, and sorry for that, Corrado, to bring the question back to you. Are you confident that when you have EuroCTP available next year, this will at least partly address your question? How do you look at that?
I don't know if the consolidated tape is the answer. Consolidated tape, my understanding is, provides data on price and volumes, but the endport form that is provided monthly by investment firms in the US to the SEC provides portfolio holdings. It's a different level of granularity, and it's a different type of information that, to Christoph's point earlier, asking the question of whether the companies use that information internally for risk management purposes or other purposes and if they do, it probably means that is valuable information. That would be valuable information for both the regulator but also for the market participants who would be able to run analysis, test hypotheses, and in general support evidence-based rulemakings.
Again, very clueless and ignorant question from me, but information you have in mind, which I understand is information provided in the US by asset managers or investment managers, is that required under any EU regulation, or it's just a gap in the EU regulatory framework?
Oh, I'm speaking under the control of the AMF. I'm pretty sure that information is being required and being reported by asset managers, money market fund managers.
So it's a matter of supervisory transparency, basically, on the information they receive.
I think it's a matter of data sharing. On one hand, I think that information is being provided to different authorities, nationals and European authorities, in different forms, shapes. Back to the point earlier in the panel of identifying duplications and overlaps, which ESMA has been doing a good job at trying to identify with their consultations earlier this year. And I think there isn't a place where all that information sits completely. So it becomes difficult to share what you cannot get your hands around fully. So that from that point of view, I understand the challenges, but the question was more, has this been, and I know that ESMA's consultation had a question about public availability of this kind of data, but I was prompted to make my comment because the panel did go there and address the issue of who uses the data and how.
And thank you so much for that. I think you're highlighting a very important point, which is that supervisors get a lot of data that maybe would be even more useful, or at least somewhat useful to the market, in addition to their usefulness to supervisors. So you're the supervisor on the panel, Christophe, so I come back to you, sorry about that. What are the incentives? Do supervisors have any incentive to share the data in the market beneficial ways that Corrado was hinting at, or basically, there's nothing in there for them?
Well, I would say the incentives we have is to make data available, at least for I mean, if it's useful for industry, it's even better. But at least, for research, we have a lot of incentives. I think Natasha mentioned this morning, this is a point I often make about the fact that the data we gather, we use it also every time we have to change a regulation to make sure that it's, evidence-based, and even if we have very clever people working on our data, when you start sharing, then you can gather more insight from the industry, from searchers, etc. So this incentive we have in mind. I think, honestly, for many reasons, but the main one at first was trying to make it sure that, considering the sensitiveness of the data, if we make it public, we are sure that we're not releasing something that eventually will give information which is too sensitive to be given. So I think there are ways, but it's still work in progress internally.
More questions from the floor? Yes. Microphone here, second row, please. Second row, please.
Thank you. Jonathan Lee from Kaizen. We're a firm that provides quality assurance through regulatory testing in relation to all of the major G20 trade and transaction reporting regimes. I wondered what the panel thinks about the need for regulatory certainty. I know we've already touched upon field reduction. We've talked about golden source reporting. I know Joachim talked about principle-based regulation. The reality is that I think we essentially moved away from principle-based regulation towards rules-based regulation probably around 2007 with the introduction of MiFID. Now, what do the panel think is the importance of regulators providing clear, complete, and tightly defined rules? My personal experience is firms find they spend a lot of time essentially with differing interpretations of various fields that are extremely loosely
Just a clarification question. Do you mean different interpretations within the EU or globally? Or both?
Within the EU, I will say, this obviously applies also in the UK, but essentially you have a whole series of fields quite loosely defined. You ask for clarification from ESMA, and full disclosure, I have been told in the past, firms should agree amongst themselves. If you are a reporting counterparty responsible for millions of reports on a daily basis against hundreds, possibly thousands of other counterparties, the prospect of having to clarify how exactly individual fields should be reported across thousands of participants on a daily basis clearly is not viable. So I just wondered what the panel thinks about how much burden reduction would be taken from simply having a very, very tightly defined set of rules.
Great question. I think we have one at the end of the room. Also, let's take it together. Or maybe it has disappeared, no? Yes.
Evgenie Pinišské, Crédit Agricole, Data Quality Team Control Manager. I'm wondering what would be your opinion about the number of trade repositories in European Union. Wouldn't be it a way to have burden reduction through reducing their number, or are we at critical level and reducing could harm potentially costs or any other aspects related to reg reporting and concurrence? Thank you.
I'm certainly going to recuse myself on the latter question. So who wants to address either question? Joachim.
I would like to address Jonathan's question, which I know from the ESMA SFTR reporting working group since ages. I think what you're asking, Jonathan, is whether there is any way to a perfect law, and thanks to Olga for planning this during our prep call. I think if there is a rule-based approach, it should be as precise and as concise as possible to the nitty-gritty details, because what I realized when we implemented EMIR-REFIT is that even so we have level 1, level 2 guidelines, Q&A, validation rules, you name it, still there was room for interpretation and we needed to interpret. And the point is if you're...
That's not right.
Well, you know, there is a degree of liberty that you have to have if you want to make things work. And either you ask everything or you do. And when you do, there is the risk that you've done wrong, but nevertheless, you did something. So I think this is pretty fine. But if it comes to principle-based things, I was actually only talking about the notification process to the NCAs. You know, this is, to my understanding, is absolute over-engineered gold plating. We don't need it. You know, I mean, you can easily find a way through when you've done something wrong and you've done it wrong in a serious way and in a material way, to liaise with your NCA and say, sorry, this is what we've done and we're trying to fix this, and this is the time frame. But this is my only point where I think like you should have a real principle-based approach, because this is needed to have confidence build up over the time. When it comes to rule-based reporting, I mean, we have I don't know 400 plus fields under the regimes EMIR, MIFIR, SFTR we're talking about. And I mean, if you try to declinate everything to the lowest degree of certainty, then it's lots of work. Nevertheless, it's got to be done, because if we now go and touch upon every point, then we do it hopefully to build the perfect law, and one which stays. You know, it comes to stay. I mean, there is lots of examples in the past of regulation that was done once, it was done right, and it stays. MMSR, it was introduced, it works.
Rosa?
On that point, that the one that Joachim was elaborating, I also would like to relate to the question. I think legal certainty is absolutely crucial. And this is something that constantly my members keep on saying. That was the feedback we received repeatedly when forming the position for the call for evidence. And why is that? Is because for compliance purposes, it is very important that the company, the market operator, knows what they need to fulfill. Otherwise, there are risks associated to that uncertainty that are not at all welcome. Another aspect as well is time. Any change should be accompanied with sufficient time for implementation. Even if the change is very much welcome, but time is very critical. And the last point I also want to highlight is on whether changes sometimes come in level 2 or level 1. And there as well, to have coherence in the framework precisely for this legal certainty, it is very important. Meaning that if the change, if the improvement comes at level 2, we need to make sure that level 1 foresees that that change in level 2 is legally sounded. Thank you.
We are getting to the end of our panel, so I'll ask Lucas and Christophe to give the answers they want, but I recuse myself from the question asked by the lady from Crédit Agricole, but please do address that question. Lucas.
Sorry, can you remind me of the question? Okay, I don't have a very strong opinion on that, to be honest.
And on the first question from Kaizen?
Yeah, very much in line with what Rosa said. Yeah, stability is important. And thinking about what information you really need is very important. Oftentimes, it seems to be an outcome of a political process, which if you consider this from an academic perspective, does not make sense at all. So, yeah, stability and clarity are important factors.
Christophe?
Well, I'm pretty much agree with what has been said on the first question. The second question is a really hard one, but let's take it. I think all options are on the table. I think we started with 6 TRs back in 2014. Now I think there are 4. Thanks, Clemens, for nodding. So there was a reduction. What's striking when we're doing this exercise is the fact that we have EMIR and SFTR reported to TRs, and we have MIFIR reported to NCAs, which then I was explaining this at the break. NCAs send the data to ESMA, which sends back data to other NCAs, because I don't know if you know that, but if you're in Germany trading in a French security, then the transaction is sent to us through ESMA. I wouldn't say there's an optimal number of TR that would make things better, but is it the right model, or how do we accommodate with these various models today when we are doing this exercise of finding the right solution for the future? I think, yeah, all options are on the table, and we will see, but feedbacks on the CBA, it's my last word, it will be very important for a CBA cost-benefit analysis. Please, everyone there today and listening, it will be very important for the community of regulators to try and make an intelligent choice or intelligent choices. Thank you.
Joachim?
Yeah, Nicholas, thanks that you allow. I mean, it's a competitive framework. So TRs are regulated. They are regulated under European law, but nevertheless, it's a competitive surrounding. And there are trade repositories that act more or less European. There are others that act globally. So are there advantages on one or the other side? Yeah, maybe, but nevertheless, they all have their sense and they are business driven. And if they are not profitable, they probably run out of the market somewhere, or due to the Brexit, some of the European transaction reporting registers like UnaVista or so, they withdrew, or I mean CCPs withdraw from the European Union. Everything is, it's a competitive surrounding, and do we have too much? Do we have too many? I don't know. I mean, it's the customers deciding. If the last one is going, they switch off the light. That's the way.
On that inspiring note, I want to thank all our panelists for their insights. I learned a lot from the panel. I hope the audience did as well, even so they're more qualified than I am. And thanks very much to ESMA for organizing this and for providing lunch, which is our next step. Thank you.
Thank you. Thank you. Thank you.
Thanks very much.
It was an enjoyable one.
Thank you, Nicolas.
Well done, Nicolas. You were very amusing. You also were very amusing.
1, 2, 3, test. Alors l'idée c'est de voir si on les a vraiment des deux côtés cette fois-ci. 1, 2, 3, 1, 2, 3, 1, 2, 3, test. 1, 2, 3, test. Parce que j'ai linké les deux sorties, mais je ne sais pas ce que ça veut dire. 1, 2, 3, test. 1, 2, 3, test. Là, toi, tu as deux symboles, je ne sais pas ce que l'un veut dire par rapport à l'autre. 1, 2, 3, test. 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 1, 2, 3. T'as toujours que à gauche. Alors après, je peux le trimer. 1, 2, 3. Pourtant, là, je t'envoie un niveau de cheval. Hein. Là, je t'envoie un niveau de cheval. Là. 1, 2, 3, test. 1, 2, 3, test. De toute façon, j'ai que deux. Là, je peux pas l'envoyer. 1, 2, 3, test. 1, 2, 3, test. Non, ça change rien. Ah putain. About, non, vidéo. Ouais, non, mais je pense que ça doit pas changer grand chose normalement. Toi, ça me fait juste sortir en fait. C'est quand je le quitte, mais. Il revient par défaut. Mais ça, c'est les niveaux d'entrée. Les 4 indépendants. Mais moi, je rentre que sur le 1. Mais tu vois, là, il y a une espèce de symbole qui dit soit ils sont linkés ou pas. Et je sais pas la différence entre les deux symboles. Non, non. Et quand je fais save, il me sort. Et en fait, il revient à la config de départ. Donc ça ne m'intéresse pas. Et ça, c'est quoi ça? USB? Non, ça, il me dit que je suis en USB. Et. T'as toujours qu'à gauche. Nanana, 1, 2, 3, 1, 2, 3, 1, 2, 3. 1, 2, 3. Je sais pas ce que ça veut dire. Ah oui, c'est bizarre, parce que pendant le stream, ça marche pas. C'est très bizarre. 1, 2, 3, 1, 2, 3. 1, 2, 3, 1, 2, 3. 1, 2, 3, 1, 2, 3. Ouais, il est toujours ouvert le stream, si tu l'écoutes comme client, tu dois le... C'est quand même très bizarre, ces histoires. Pourquoi on voit bien 1, 2, 3, 1, 2, 3. Non mais ça c'est ce que tu envoies toi, c'est ce que tu envoies, c'est pas ce que tu reçois. Faut que tu te mettes en public, enfin en client on va dire. Et 1, 2, 3, et 1, 2, 3. Oui. Et ma. Oh, je pense pas. Bah, ok. 1, 2, 3, 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7, 8. J'ai pas de temps du tout là. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3. Et. Ouais, c'est bizarre ça. Ouais, d'accord. Ça en est là. Ah, c'est bizarre. Hein.
Par contre, là, on est en direct. Hein. Donc, les gens qui sont en direct, ils entendent tous les tests qu'on fait.
Là, t'es en stéréo.
Il y a combien de personnes qui regardent? Comment? Là, j'ai pas mis stéréo. Donc là, d'ici 40 secondes, en fait, c'est la latence qui est.
C'est bizarre.
D'ici 40 secondes, ça va.
Et 1, 2, 3. Ouais. Je comprends pas là ce qui se passe. pourquoi ce qu'on envoie est bon, entre guillemets. Enfin, nanana. Attends, je vais juste faire un test. Je vais te mettre en théorie sur le canal droit, si je comprends bien. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. On écoute quoi? T'as mis right only, enfin mono right, et on n'a rien du tout. 1, 2, 3, un déterminant stéréo là, c'est marrant. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. Normalement, tu dois recevoir sur 2 canaux.
C'est ça, hein. Là ça a l'air d'être bon.
1, 2, 3. 1, 2, 3. Test. 1, 2, 3. Qu'est-ce que je fais de lunettes? Ah bah elles sont là. Tiens. Quand on n'a pas de lunettes, on ne trouve pas. 1, 2, 3, bonjour. 1, 2, 3, bonjour. 1, 2, 3, bonjour. Test. Test, bonjour. Test, bonjour. Et là, tu es en client ou tu es sur l'envoi? Tu es en spectateur? Non, mais je veux dire, tu es bien le spectateur là. Celui qui. Ouais, d'accord. 1, 2, 3. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Donc 3 et 4. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Ok, ben voilà. J'ai pas pensé à ce câble plutôt. C'est un motif.
Il est à toi celui-ci?
Enfin, il est d'ici.
Ok.
Parce qu'ils ont une petite installation.
Yeah.
Click here for you after. Moving the slides will be my laptop.
Yeah.
But you can move it with that.
All right, so welcome back to everyone. Please take your seats. We're about to start the second half of today's discussion. I can already see Matthias. Matthias, please note if you can see and hear us. Matthias is not showing any signs of seeing or hearing us.
Yes.
Okay, excellent, very good. Very good. So we're going to have the next session, without which I guess today any event would be simply considered irrelevant. I don't believe you can have a data discussion or data day without talking about AI or the topic of technology more broadly. So that's what we would like to explore at this panel now. And I will briefly introduce the speakers, each of which we have requested to subsequently make their pitch on the topic for approximately 15 to 20 minutes. And we'll also try to provide for a few questions to be taken at the end of the session. All right, so we're going to start with Matthias, and Matthias would be really grateful if you can stay with us for the full session, for the full next 40 minutes. There is usually a question or two that very nicely fits directly to be addressed by the Commission, so grateful if you are with us for all this session. And Matthias is the acting head of the Digital Finance Unit at FISMA. That's the directorate in charge of the Financial Services and Capital Markets Union. And prior to joining FISMA in the Digital Finance Unit, he was previously working on regulations related to banks, investment firms, conglomerates, and financial market infrastructures. After Matthias, we're going to pass the floor to Mikko and Thomas. Mikko is the head of division at the supervisory processes at the Financial Supervisory Service Authority in Finland. And Thomas is his colleague and the leading AI expert in the Finnish Financial Service Authority. I hope I got it right, especially in terms of responsibilities. And that's it for me. Matthias, the floor is yours. The slides are on. All attention is on you. Thank you.
Fantastic, and good afternoon, everybody, and apologies for not being with you there in person for this very interesting day, but unfortunately there's a little bit too much going on in Brussels these days, so I'm here virtually at least. A very important session as well, what is happening on AI, a lot of things obviously, what does it entail in terms of policy, what does it mean for the sector, etc. So I'll speak a little bit around these themes, starting my intervention at least with taking stock a little bit where we are, and then coming from a commission, speaking a little bit about policy. So hopefully that complements the panel interventions quite well. Now, of course, the context is well known to most of you, to all of you, I gather. AI, the use in finance, rapidly evolving. Of course, we've seen over the last decade or so, accelerated since a few years, a very rapid uptake of AI across financial markets, banking, securities markets, insurance, you name it. This is also based upon a very kind of a substantially increasing reliance on data, analytics, and automated decision making. All this also kind of powered by the kind of substantial increase in capacities for data storage, data processing, and the like. And that, of course, means that probably data analysis and the use of tools such as AI that helps you in that, and that can also do a lot of other things, will become ever more important going forward. And that, of course, also then kind of raises interesting policy questions. Notably, what type of framework should we have in place to kind of ensure that the benefits of technologies such as AI in terms of, for example, innovation, efficiency, and the like can be reaped, while at the same time continue to kind of uphold the objectives that underpin the activity of us as regulators and supervisors on a day-to-day basis, namely consumer and investor protection, market integrity, and financial stability, for example. So that's a little bit the overall context. Next slide, please. Now, brief overview of opportunities, of which there are many, and I think some of these apply, many of these, of course, apply well beyond the financial sector. AI is a general purpose technology which is being rolled out in society as a whole, but we certainly see the benefits as well, and the opportunities stemming from AI in finance too. So one thing is certainly kind of the potential to kind of contribute to more efficient processes and the efficiencies that stem from that. There is also kind of an ability, for example, very important in finance, to detect fraud, to mass through all the amount of information that is there, to help you and kind of come to conclusions when it comes to fraud, and to yield information and help for those of you who do monitor fraud. Similarly, in a sense, we also see the use of AI being used for kind of risk management, assessing risk. Credit worthiness, obviously, in banking is one, but there are other risks as well, underwriting risk in insurance, or various risks that financial entities face. It can also help with decision making. I just mentioned kind of a credit worthiness, where, for example, the AI tools, just as traditional kind of credit worthiness assessment models, can help you provide the data you need and the kind of indications you need in order to kind of guide you in whether or not to accord a credit. So that's just one example, but we also see now with the kind of uptake and the kind of versatility of newer AI models, an increased range of potential contributions in that respect. So, and obviously also we see the use of AI when it comes to helping firms comply with, for example, financial regulation, things that we are responsible for. And it's probably quite probable that AI can help in that respect. And also, of course, from our own perspective, many of you in the room today are supervisors. And of course, also there, we can use AI to help with supervisory tasks. The Commission, of course, like every other body, responsible bodies out there, are also experimenting with AI. We've noticed that ourselves. We have tried, for example, to use in a kind of an experimental basis to use AI for some of our policy development work, notably when it comes to kind of assess whether it can help to kind of to assess the impact of our policies. And there it yields certain kind of interesting learnings. It's quite good at summarizing rules. So far, pretty crap at kind of developing creative policy proposals, as to be expected, perhaps. But even for the more kind of basic tools such as summarizing, there are also kind of quite significant learnings that demonstrate the importance of getting the data right, testing the tools, etc., to ensure that the kind of conclusions and the kind of suggestions they give to you are entirely reliable and representative of the kind of responses we get. So experimentation for the time being. Next slide, please. However, it is also true that all these benefits and opportunities, AI also comes with potential risks that either may arise in the short term, but perhaps a little bit more in the near term, and I've listed some of them here. Of course, the traditional trait in AI debate is that the tools and the systems and the models underpinning them are quite difficult to understand and to explain to the outside. So how do we, or you as supervisors, kind of assess the fairness, the robustness of these models, and how do you factor them in when you kind of try to assess how the use of these tools affect financial entities' compliance with financial regulation? If AI becomes an important part in kind of delivering the financial services, how can we ensure that it actually delivers according to purpose? AI is rapidly developing. One can perhaps even say that there's an arms race out there for the most advanced models, and we see a potential future where perhaps there will be an increasing kind of systemic concentration and a reliance of third parties on a very select number of third parties. This is not unique to AI. We see the same thing in cloud services, for example, but it does lead to certain risks. For example, if there's a widespread reliance on the same infrastructures, the same data, or the same models, how do we address the potential systemic or interconnectedness risks that may stem from this reliance? That's certainly something that is well worth pondering. Data governance, data quality in particular, I mean, the models and the performance of the models obviously depend on the data upon which it has been trained. And there we have well-known issues around data quality and and representativity of data, which is very important to ensure, for example, that the data upon which a model is trained does not reproduce certain biases or potentially discriminate due to the kind of lack of representativity of the underlying data upon which these AI models have been trained. Data governance is another thing. How will the AI models actually be used within a financial firm? Who is responsible for their use? What kind of risk parameters does a financial institution grant the use of AI? And how are the risks controlled and mitigated in that respect? Governance, extremely important in that respect. Also, what we do see is, of course, with the kind of technological evolutions and kind of more and more kind of self-learning and dynamic AI systems out there, how do we handle that from a supervisory or regulatory perspective? We may have approved a particular model at some stage, but how if it develops and continues to adapt going forward? How do we ensure kind of continuous yet proportional controls of how the AI models perform and behave in these ways? Next slide, please. Apart from these risks, and perhaps I've alluded to them some already, there are kind of challenges underpinning, accordingly, the kind of uptake of AI as well. And some of them, I mentioned data quality before, so of course data-related barriers are quite substantial in this respect. How do we ensure that we actually make available high-quality data upon which AI systems can be trained? And how do we ensure that that data is representative? How do we balance kind of other policy objectives such as data protection and data privacy with the need to provide kind of good data that is in order to kind of train the models to ensure that they deliver results which are robust and representative and do not reproduce bias, for example? These are quite difficult policy choices. There's also another kind of challenge to the uptake, which is simply related to skills and capacity. I think that's something that we all face. Faced with new technologies, one has to learn. Those who deploy the technology has to learn about its risks and how it performs, etc. And of course, for advanced technologies such as AI, there is a shortage in the skills around, and there's a competition for kind of acquiring that talent, where both supervisors such as yourself and financial entities, not only financial entities, actually very many firms around the economy are competing to kind of get hold of this expertise. So that's another kind of challenge for the uptake, how to actually ensure that we have the skills in place to use the technology and to understand the technology and monitor and supervise the technology in a good way. Of course, like any new technology, it also has to be integrated into kind of the existing ICT infrastructure. And we know in the financial sector that, of course, there's a lot of legacy ICT infrastructures, which may make that challenging and complex and costly. And so that's another kind of challenge. And then, of course, also what we in the Commission and you in terms of supervising the rules, of course, are responsible for is the kind of uncertainty around how a regulatory framework largely kind of put in place before the advent of AI on a substantial scale, applying this particular sector to this particular technology. And that creates uncertainties in itself, which can also be kind of perceived as a potential kind of barrier to uptake, because uncertainty in that respect is never good. Next slide, please. So that's where kind of turning over to the policy side of things, where the Commission has been working not only, of course, from a financial sector viewpoint. I'm here, as Olga mentioned today, as the digital finance acting head in DG FISMA, so Financial Services Department. But as I mentioned, AI is a kind of a general purpose technology, and the policy that has been put in place by the Commission and by extension also by the legislator is one of a horizontally broad framework that tries to govern this technology across society as a whole. So there is a very kind of broad ambition to kind of ensure that we reap the benefits from AI in that respect, and strong policies put in place to that effect. And I've cited some of them here, which is obviously focused on kind of providing and helping building up the kind of data and computing infrastructure that is necessary to kind of run these models. And also, to go back to some of the problems I mentioned before, the access to data is to ensure also now to kind of put in place the policies needed to kind of provide access under certain conditions, certainly, to large and high quality data sets. So this is reflected in certain kind of policy frameworks and strategies at the European level, which I mentioned some of them here, and I'll dig a little bit into that in a bit. Next slide, please. But obviously, when it comes to the AI in terms of regulation, I think all of you are familiar with this, the kind of ground framework now since a year or two is the AI Act, which is a horizontal act governing the kind of use of AI across society as a whole. And it's a kind of a tailored and proportionate framework aimed at kind of dividing the use of AI systems into certain buckets, depending on how big a risk it may pose to the fundamental rights of people in particular. So you see here on this slide that these buckets are essentially four. There are some kind of usages of AI that the legislator has deemed to be clearly unacceptable, such as social scoring, and this type of use is clearly prohibited. Then you have certain areas where the use of AI may pose high risk, and there are two kind of cases there which are relevant for financial sector, where, for example, the AI can be used in such a way as it kind of governs a person's access to private essential services. And two such services, for example, are access to credit and access to life and health insurances, because this has been perceived as kind of core products that you need access to in order to be kind of a fully functioning economic individual in today's society. So these two use cases are currently the kind of sole financial sector use cases, which fit into this kind of high risk category. And these then come with certain kind of additional requirements on top of financial sector legislation. And then you have other kind of AI systems, a broader range, which do not come with any particular risks, but just come with, and as a result, the requirements are also very kind of soft. It's mainly transparency. And then you have a vast majority of AI systems where there has been perceived to be no risk at all, or minimal risks, and these are kind of permitted without any kind of further restrictions. So this is the kind of base regulation that governs the AI, the use of AI in Europe. Next slide, please. Now, today's conference is taking place under the auspices of kind of simplification and burden reduction. And this is also something that has been kind of accompanying being kind of initial stages of implementation of the policies governing AI in the EU, where, as I mentioned, the AI Act is in place, is in force, in application, parts of it at least, since about a year. And the Commission has also started to kind of take stock of implementation experiences so far. And these implementation experiences highlight that there have been certain kind of challenges of implementing the AI Act on the ground. And as a result, in a recent kind of act that came out in November, the Digital Omnibus, which covers a broad range of areas, there was also a part devoted to AI. And there are certain changes to the framework have now been proposed by the Commission, will be subject to negotiations to ensure that the AI Act is clear, simple, and innovation-friendly in that respect. And there's a very wide range of changes to the AI Act in that respect. I'm only listing some of the kind of high-level changes here, partly also giving the sector more time to comply, so that the timelines for high-risk use cases may be adjusted to give the sector a little bit more time, depending a little bit on the availability of the kind of support tools, for example, standards, whether these standards are in place, yes or no. If they're not in place, then the time frame for kind of applying the high-risk provisions will accordingly be pushed. And there's also kind of other kind of changes to the AI Act now being proposed by the Commission in order to further kind of support the easy implementation. For example, the increased use of AI regulatory sandboxes, and also to kind of further clarify the interplay between the AI Act and other EU laws, including in the financial sector, where work is actually already underway. In parallel, and also partly part of a digital omnibus, there's also been a new kind of data union strategy, which builds on the previous strategy adopted a few years ago, which also aims to address head-on the kind of this problem of getting access to high-quality data. And the aim is really to kind of facilitate data sharing with purpose to kind of support the uptake of AI and leadership in that respect, and to boost European economic security and competitiveness. So this is just two examples of kind of where the initial policy framework governing AI in Europe has been complemented over time, now with the purpose to kind of also kind of facilitate and simplify and reduce where due burdens of applying the framework. Next slide, please. Yes, so coming to a conclusion, then handing back the floor to you, Olga. Clearly, I think this is not the only panel that we will have on AI data and the use of AI and data in finance. This will be a theme going forward for future conferences and future events. There will be a lot of policy focus. There is already a lot of policy focus, but that policy focus will remain. We will continue to monitor the deployment of AI in finance against the backdrop of rapidly evolving use. In that respect, we will also work to try to address challenges for example, the ones that I mentioned today, identify where there are obstacles, assess whether these obstacles are warranted or whether they should be dismantled, and act if that is the case. And also to kind of monitor as the deployment continues, as the usage evolves, how risks also continue to evolve, and to mitigate these risks in that respect. So also from our perspective in DG FISMA, we will certainly continue to work with supervisors, companies, and member states in implementing the AI Act in finance, and to also assess in particular how it interacts with EU financial sector legislation, and work with the sector to ensure that we address any kind of lingering doubts about uncertainty in that respect. So thank you very much, and over to you.
Thank you, Matthias. Thank you very much for that. We now move to Mikko and Thomas. Please, the floor is yours. Thank you.
Thank you. I'll start the presentation, and then Thomas will continue on the Gen AI part. The presentation is more of a recap of our supervisory journey with AI since 4 years than the simplification or burden reduction as such, more of the produce of the burden, how we're using it, and what benefits we expect to gain out of it. First, we use AI both in structured and unstructured data. So to kind of illustrate what we're talking about when we talk about structured data, of course we've been talking about EMIR, MIFIR, SFTR this morning already a lot. We also target AML data in the transactional structured data. Also, we have a lot of prudential data coming into the supervisor, FinRep, CoRep, so forth. These are just the examples, not the full set, so not the exhaustive list. And then we'll talk about unstructured data, that's text-based data. We both have kind of disclosures coming out of the market, and then we have on-demand data we request from our supervised entities. On the on-demand side, we have on-site supervision, on-site inspection data, and then we might have the supervisory review and evaluation process material we gain from the entities. And on the disclosure side, we'll talk about ESG disclosures, SFDR, prospectuses, and annual reports through the SF framework. Just to mention a few, of course, there's a lot more key information documents, so forth. And then on an example for the structured data and how we used AI in that is we recently embarked a journey with the Commission on the technical support instrument, proof of concept on market abuse detection. So what we expected to gain was enhanced market surveillance and more efficient regulatory efforts. Tools enhancing our ability to detect and prevent market abuse. And as it was a technical support instrument, a multi-country initiative, we expected to gain collaboration between regulators, stakeholders, and communication, knowledge sharing, procedures, and so forth. And what we had as like substance objectives were identifying changes in trading patterns. We were using MIFIR data, so of course there would be anomalies or outliers in the data set as well, so those might be cases of market abuse, they might be data quality issues, so identification of those as well. Then there was a few other use cases in this initiative, and the putting it into production is still a way ahead of us, but the outcome of the proof of concept was promising at least. Well, considerations, as it was more of an opportunities and challenges session, we still have to look at the GDPR, as Matthias mentioned. There's data privacy things to consider, data quality, as I mentioned, and as well labeling the data. We have huge data sets and maybe a scarce few labels to complement that data set for machine learning purposes. So those would be tackled in the future as well. what we expect to gain out of AI in general is, of course, more impactful supervision and as well accuracy, efficiency within the organization, and as well will targeted scope on the key risks in the industry or in our supervised entities. And like a key building block is data quality. Also, a key outcome of AI might be improved data quality, so we'll find the outliers, we'll find the data quality issues easier. What the challenge is, Matthias also already tackled or covered most of these, but governance, of course, for AI is a big topic we have to take into consideration. The ethics in the AI models, so forth, all of those already mentioned in Matthias' presentation. Of course, regulatory adherence, as mentioned already, but one of the key points is in this triangle is agility. As things progress at the speed that if we use the old methods of IT development, waterfall approaches will never be able to take into production these tools. So we have to reinvent our IT processes and be more agile in our IT development with regards to AI. So those are the key challenges in AI in general.
Okay. Thanks, Mikko. My name is Tuomas Ritola from FinFSA. I'll touch briefly on the more on the opportunities side, or let's say more on a hands-on presentation on what can be done for the unstructured data, and especially using Gen AI models and how we've used them so far. So this is, I think, sort of understandable for us all here, but clearly sort of the financial innovation and sort of diversity on the market has led to a kind of a innovation gap between what supervisors can do and what happens on the market, or the financial innovation that happens. And this kind of AI-driven automation gives us the way to kind of tackle somehow this gap. So without actually taking a lot more, sort of increasing the headcount of the supervisors, we should be able to tackle these new things that we need to still supervise. But this kind of as an overall reason why we do this and how we've done this at FinFSA is basically that we have an ongoing project where we have identified use cases, a bit more than 100 use cases mainly for Gen AI, also for kind of more traditional machine learning. And the goal in the end is to kind of develop the solutions, these tools, sort of practical tools for our experts, but then also the capability of being able to produce these tools, even kind of more importantly to some extent. But it forms this kind of a funnel of having a lot of use cases and then working on a select few. And we've had a lot of different use cases, as I mentioned, and we've kind of built some themes. Of course, it could be categorized in many different ways. This is one way of doing it. So analyzing information in documents, or then kind of helping the customer support functions, or then automating some tasks or processing large numerical data sets. And here we the first three are more on the unstructured data side, so text data mostly, where you can easily apply but you can apply Gen AI models easier there. And then you have the structured data, which is more kind of on the traditional machine learning side, where you also need more of the labeled data and so on, kind of some of the things that Mikko mentioned as well. But all in all, kind of many of the supervisory tasks that we've considered for kind of these AI-driven automation tools is that we have supervised entities documenting their practices or their offering, and then the supervisors analyze this documentation from the kind of supervisory perspective. So we have some list of questions coming from regulation, and then we get sort of compliance information or some kind of information to our supervisory questions based on the document's contents. And good examples are inspections in general or thematic reviews, or then, for example, prospectus scrutiny or analyzing fund documentation or extracting data, for example, from SFDR documents. And these kind of form some type of a archetype use case for financial supervision. So we have regulation from which we can extract questions, and then we have the supervised entities who produce some material, some documentation, and then we kind of have to cross-check these two and then produce some findings. And then in a bit more complex case, you have, of course, like a thematic review, you would have several entities producing a lot more documentation, and then you'll kind of have to run all the documents against all the questions, supervisory questions that we have. And traditionally this has been done with kind of expert efforts, but now of course the goal is to include some level of help with LLMs to this kind of a process. The AI development that we've done is split to kind of two types of development. So we have tools for sort of specific tools for specific use cases where you might have some functionalities or user experience. An example here would be prospectus scrutiny. I'll show you quick, not a demo, but some screen captures on what that looks like currently. And then kind of a platform for running and monitoring, and also perhaps developing kind of agentic workflows, automating some workflows that might be sort of case dependent, or then that might be a bit more general, but still in the context of financial supervision. So kind of building dedicated predefined agents for some workflows that we have might have to do with analyzing annual reports or SFDR disclosures, or drafting, for example, decision documents. And then we've also been working on some sort of more open-ended agentic workflows that we can kind of build tools for the agents and then give some kind of skills, sort of build our expertise into let's say processes that these agents can use. And you can sort of think of these code automation tools like Claude Code that are already really capable tools in the kind of context of automating code development. But then in this case, we try to sort of build same kind of tools for knowledge work. I'll show some examples. So this is, of course, not so visible here on a screen, but just as an idea, we have a platform for prospectus scrutiny, like LLM-assisted prospectus scrutiny, where we have the prospectus itself and another mic, thanks. The prospectus, or on the right-hand side we have the prospectus, and then on the left-hand side we have sort of the questions from the regulation that our experts currently need to look for in these documents by hand. And I think in this case it's something like 120 questions, which might be really sort of detailed, simple questions, or then a bit more elaborate questions. And then basically having these views side by side so that you can look you can run an AI analysis for these questions based on the document contents, not sort of if someone's familiar with the AI lingo, not having a RAG system, but sort of brute forcing through the whole document context these questions. And then you can see the outcome of the AI analysis, and then you can, of course, the expert has to go all of these through and comment if they disagree or agree. But it also kind of improves the user experience of prospectus scrutiny if you sort of disregard the whole AI analysis. But these kind of tools help the expert go through these documents in more detail. Then another example would be analyzing the SFDR disclosures, where we have kind of an agentic platform where this is one example of such a workflow that we've automated there. And here you can see kind of the different agents or the different workflows that we've built. And then in the middle, we first have all the kind of the scraped documents from different funds, in this case, the SFDR disclosures that you can select and analyze. And then when you've selected a handful of documents, then you can run sort of the same set of different questions through all those documents and get the results on a UI. So here we have, it's not that well visible, but we have the SFDR document, sort of there's a table on the first page which we analyze, and then you get the results of that table. Then is it so that we first extract some information? So we have some questions where we want to extract the information from the document, and then we get the results on the same kind of tabular view, and then we have validation whether the disclosure is kind of filled properly, and then we have that for the expert to analyze. And then might be sort of a tangent to some extent, but there's the idea of this open agentic kind of knowledge work platform similar to code automation, like Claude Code, where we basically have a project that could be a SREP process with all the documentation, and then like a document view on the supervised entities documents, and then basically a chat like you have in GitHub Copilot or Claude Code. And then you can sort of define skills and give tools to these agents where then they can sort of navigate through even a bigger amount of documents and kind of try to find the relevant information for the user's questions in those documents. So this just to give an idea of what can be done with Gen AI, so we can actually build these kind of like really powerful agents with different tools, and we can build our expertise in terms of like described work processes for these tools. And then we can sort of think of it as onboarding an employee once and then reusing this information later on. But then going forward, the point here was to kind of show to some extent that these models already now can handle really, really complex tasks. So I bet that they can, in many cases, support really well supervision, but also perhaps in some cases conduct supervision. But of course, they'll need to be an expert or always kind of in charge or responsible for all of these steps. And then it sort of technically mostly comes down to context engineering. So I'd say that the models as such have capabilities that we can really well use, but then it's more of a matter of giving the models the right context to make these decisions or automate these workflows. And I think the financial supervision is in a sweet spot for utilizing AI. And I don't think that the work as such will disappear, but we can like really enhance the coverage and the quality of supervision that we do. And kind of regarding the disclosures, I think human readable is increasingly some like equivalent to machine readable. So if it's well readable, a document, for example, if you have a clear template that's easy for a human to understand, then nowadays the LLMs can actually understand it really well. But also it sort of makes sense to think of LLM suitable formats. So the key questions are, how should we use these agents, kind of what tools we need to supply them with, and what the user experience should look like. And I think this is more a question of piloting, testing, sort of refining these best practices. And the AI assisted development is, I think, a crucial thing here. So we should really enable agile development and sort of testing something, failing, learning fast, since the code nowadays is kind of ephemeral. It kind of, you can build it again, you can test something really quickly and then sort of iterate. You get a lot more, you get a lot quicker to something that's usable for the experts and testable for the experts. But the thing is that we need to be able to actually give those tools to the experts for testing. And that's, I think, a challenge at the moment. But thank you.
Thank you very much. Thank you for this presentation. And thank you to Matthias. Is Matthias still with us?
I'm still with you.
Yes, you're there.
Very
Perfect.
attentively.
Very good. Very good. So there you go. You have just received a rather concise but comprehensive overview of the policy stance the Commission has on the AI Act, where it is now and where it's going forward. You have also heard concrete examples of how AI solutions are being implemented in day-to-day working processes of the regulators. Is there any question anyone would like to raise, or is there any challenge anyone would like to pose? We have a few minutes to take a question or two if there are any. Yes, Rudolf, we need a microphone at this third, or I can share mine, it's not a problem either.
Rudolf Siebel, German Fund Managers Association. We are trying sort of the same project as a lobbyist to make our lobbying work easier. And we are facing some technology challenges which may come that we still operate on-premise IT. But for example, the first challenge we already see that large language models grapple with PDFs which are longer than 20 pages. Maybe can you relate to somewhat, to add a little bit more color, what sort of the practical challenges you find when embarking on such a project?
Thanks, that's a good question. I think I've been banging my head against the wall for the last 10 years with PDFs as a file format and developed like a love-hate relationship with them. But nowadays it seems that the models do really well. They start to do really well with PDFs and even quite long PDFs. And I think interestingly, the models tend to go from like you having to extract text and data from documents and then analyzing that to actually the models being able to sort of treat them as images as we people do, where you then can also kind of make sense of the visual information. That was kind of one of my points, that the human readable becomes machine readable. I would argue that it already is, but if we fast forward half a year, it'll be again a lot better than what it is now. So I think that should not be a problem in the future, or even now.
Thank you very much for that. And yes, one more question. Rudolf, just behind you, if you could pass the microphone.
Thank you. Zigrida Lushai, financial market lawyer. Just a curiosity, the AI tool are from a third-party provider, or you are building the AI tool so the data set it's, let's say, implemented by the authority?
The tools are built by us or us with consultants internally, but of course the models that we use are mostly from Azure, so we don't train our own models, but we use kind of the intelligence as a commodity to some extent from the big models and then build on top of that. So the kind of the context engineering is the part that we do. Try to give the model the right information to make these decisions, or not decisions, but kind of analysis.
Thank you so much.
All right, then I would like to thank our speakers. Thank you very much for joining us today and sharing your insights. Matthias, thank you for finding a time in a very busy days. Most probably what should be right now for you, and good luck for tomorrow.
Thank you.
Okay, thank you very much. And I would like to now invite our next panelist to join me here at the front of the room. We're going to have microphones available for everybody. Very good. We're just going to hand you them in a second. So this is the panel to continue the discussion on the use of technology and how technology can help simplify the reporting burden, among others, and also how can it be applied in practice in concrete terms. We have a hopefully nice combination here of market practitioners, of supervisors, but also academia, which we appreciate a lot. That is not often happens in our data space, but we are particularly grateful to Olena Havrilchuk, who is the professor at the University Paris Panthéon Sorbonne, and who also is the director of the master program there, the master program entitled Finance, Technology and Data. Olena, I pass the floor to you, and the panel is in your charge.
Thank you very much. Thank you. So thank you very much to ESMA for inviting me to moderate this panel. So I'm going to present to you our wonderful speakers, our veterans. So we have Clemens Gütersberger, who's been working for Austrian Financial Market Authority for the last 14 years. He was responsible, and he's responsible for markets and exchange supervision, and so for different reporting regimes, MIFIR, EMIR, and others. So overall, he has 20 years of experience in data reporting, and he's also a member of ESMA Data Standing Committee. So he is an expert. Then we also have another supervisor, Julian, but he's here from ESMA. Julian has been here for 12 years, and he coordinates ESMA's trends and risks monitoring related to ESG, and more generally everything which is related to ESMA's sustainable finance policy and supervision. And he has a lot of experience with unstructured data. And before joining ESMA, Julian worked for 5 years at Institute of International Finance in Washington. And then we have two supervisors, and we have one practitioner from private sector. So Vincent Fouquet, he's a senior manager consultant at IBM Promontory since 2018, and before he worked as a freelance consultant, again, related to data reporting. And in 2024, Vincent participated in the European Commission report about embedded supervision of decentralized finance. Okay, so let's start. Maybe before really answering the question, how can technology support burden reduction and compliance costs, maybe let's try to identify some pain points. I know that supervisors have made lots of consultations with market participants. And so my first question is to you, Clemens. What have you learned from those reports, those consultations? So what are the pain points?
Thank you very much, Olena, for the nice introduction. And it's an honor to be here and to speak here. As you mentioned, we've had a lot of consultations in the past. So mentioning from the ECB, from the Commission, various consultations, and most recently the call for evidence from ESMA on the holistic review. So I think we've already heard a lot of feedback today from the audience, from the questions, and also from the panel discussions. And I took some notes because a lot of pain points have already been mentioned and addressed today. And I think from those consultations in the past, and as I said, most recently, we already heard a lot of pain points from the industry. And we now, I believe, are in a position that we know exactly where the pain points are. So now it's the time for us to do the homework and think about how to address those pain points. And I would like to pick up one of the topics that has been mentioned right now and also in the morning today, and also from the audience, which is the very starting point from a new requirement, which is the rulemaking and the lawmaking. We heard there was a shift from principle-based regulation to rule-based regulation. And I think the first struggle and pain point already comes when we have a new rule, a new regulation, which is written in a human-readable language. And all those investment firms and the market participants have to interpret those rules.
We just heard that human readable is the same as machine readable.
I happily took note from the comment Thomas mentioned that human readable becomes more and more machine readable, which is a very good positive outlook. And I think we have to work on that. So as I said, the starting point is already when all those affected investment firms or reporting entities have to interpret those rules into a machine-readable code and transform those rules into code. We heard that there are many different interpretations, although we have the level 1 text, level 2 specifications, level 3 guidelines, level 4 validation rules, etc. There's still room for interpretation. So I think this is already one of the big pain points where we need to think about how we can best address that. And I've heard it and I've learned that we can make use of AI for improving this situation. So this is one of the good positive news today. Secondly, I would like to mention a very painful process, which is the data submission part. So we have currently file submissions on a daily or whatever frequency based situation. And I think in the future, there will be better solutions to file submissions from entities reporting data. What we also have heard today, and I had a very interesting conversation in the lunch break, and I'm personally also convinced that the data that is, and I think it was Nicolas' panel where he asked this provocative question on is data reporting useless for the reporting entities? So we heard that the panelists tried to avoid to give a clear response to that question, but in my view, there is a clear response to that, and I think we currently are in a situation where the data that is reported from firms to the regulators is not needed or not used by the entities itself. And I think we have to think about a situation in the future where we have one data set that is used by the firms themselves, but also at the same time is used by the regulators.
And researchers.
And researchers. And ideally, we have one data set, one truth, one point of truth, which is used by everyone. So this would reduce burdensome transformation of data that is in the firms. And I've heard from the colleague today in the morning from the energy sector, where one energy trade is reported under 5 different regimes in 5 different formats, etc. So there's one ideally in the future, we have a situation where there's one data set used by everyone. And the third point I noted down, which is a very burdensome process and where we have to think about how technology can help and improve the situation, is what I call post-processing. So we heard about the burdensome reconciliation process. So we have dual-sided reporting, and there is a post-processing taking place in the regulatory community, which is a reconciliation and then asking for corrections, etc., etc. So I think we also need to think about how we can get rid of this burdensome process, which is not getting rid of dual-sided reporting, but try to address this through other means. That could be new technologies, namely some kind of DLT chains, etc., where we can use these concepts and get rid of or reduce the burden at that step.
Okay, thank you very much. Julian, do you want to add something to this list from the ESMA perspective?
Yes, I'm not sure. Yeah. Thanks. I saw the ominous yellow light on the microphone. So this one seems to work. Good afternoon, everybody, and thank you for the invitation to speak and for the kind introduction. So I will take a slightly different angle from what Clemens presented, because as you might have heard, I've spent most of the last few years working on sustainability reporting, and as I'm sure many of you are already aware, sustainability essentially relies on a public disclosure-based approach. So that's very different, or different context, let's say, from, for example, the type of regulatory reporting, which I think Clemens was mainly referring to. So since I'm an economist, I like to speak about cycles. So if I can sort of frame this in a sort of a cyclical description, let's say, I think we've moved on from what used to be a strong focus on direct regulatory reporting through, so you mentioned several of these data sets, EMIR, SFTR, and so on, which was essentially in response to the financial crisis to basically give more power to public authorities and to safeguard the financial system in a sense. Now, just like you could argue that regulation has peaked and we're sort of scaling back some of these regulations, then the approach to data regulatory reporting has also evolved. And if I look specifically at the prism of sustainable finance, this has taken the form of really a requirement for entities not to report directly the information to supervisors, but to publicly disclose the information. Now, that's great because it also empowers investors and researchers. So that's very positive from many different perspectives, but it also creates a host of different issues for supervisors, because if you have publicly disclosed information in the form of PDFs, then of course you have unstructured data, so you need to be able to collect and process that information in order to make something usable out of it for supervisory purposes. So unless you're able to structure this information, basically, the objective of becoming a data-driven supervisor is sort of hampered by this approach in a sense, because you're left with only unstructured qualitative information which you're not able to really integrate in your supervisory processes, unless you've developed very sophisticated technologies like some of them were presented to us during the previous session. So now we're shifting to this new burden resolution angle, and of course that's creating new issues, or it will create new issues down the line, not the least if the burden reduction efforts works very much against some of the solutions that were intended in the first place to help process the unstructured information. So that's going to be possibly one of the major pain points going forward for supervisors in the context of sustainability reporting, at least.
Thank you very much. And Vincent, same question to you. What pain point would you like to highlight?
Yes, hello. Thank you for the invitation. I'm very happy to be here. So in my perspective, which is, let's say, from the ground, leading dozens of projects in my career around surveillance, but before that around market risk controls, and also around transaction reporting, the main issue is clearly the data quality. The first thing to understand is that improving the data quality is a pretty hard project to sell to a bank management, because there is no clear return on investment that can be assessed on that. So what we were seeing from in most of the bank we were working for is a real issue with the data quality. So if we take, for example, the transaction reporting, you have to figure out that the front office system are numerous. They are pretty different from one another. Generally speaking, there is one in global banks, there is one front office system for each asset class. And those front office systems and their data model are not evolving as fast as the market. So in order to fill that gap between, let's say, a system which will be updated every year or every 2 years, which is significant cost, by the way, there is a lot of customization workarounds that are developed in order to allow the front office to start a new business, introduce a new product or a new feature on a product. And this results in let's say, an issue for the system which are working behind, so in particular the transaction reporting one, to really understand what is in the systems they are extracting the data from. So that's clearly today, I think, one of the main blocker, because even if you can install the latest version of any AI, if you feed it with bad quality data, you won't end up with a good result. As people in IT department says, it's garbage in, garbage out.
Okay, so let's now move on to the question of which technologies have been the most promising in the last years. So maybe let's really take stock of what has happened in the last 4 or 5 years, with which technologies you have experimented, where there were some successes, and maybe where those technologies have fallen short of your expectations. So you can choose some examples, go into the details really to understand what's going on. Julian, maybe you can start as an expert with unstructured data. I know that you have tried different approaches, natural language processing, machine learning, more recently LLM. So what's your experience?
I'll give you some examples, but I have to say right away, we've never gone as far as the Finnish FSA in our experiments. So it's very interesting to hear from other supervisory authorities what they're doing and what prospects there are for us in this respect. So one example one case we've been working with very closely in recent years is how to identify, so how to help supervisors identify companies that are at potential risk of greenwashing. And I don't think I need to define the term. That's probably, it's been in the news over and over again in the last few years. But from a supervisory perspective, when you're faced with a huge amount of unstructured information, from multiple sources at once, you need to be able to develop supervisory tools, supervisory technologies, or so-called subtech tools that sort of enable you to more efficiently process the information and develop your own risk-based approach and so on to help you identify the firms and eventually verify some of the claims depending on the technology. So the technologies themselves we've tried or we've experimented with sort of give different answers to different questions. So as you said, we've tried, and we've been mainly relying over the last few years over a relatively simplistic approach, I think, at least by today's advances in LLMs. So using dictionary-based or lexicon-based so-called regex approach, where you identify specific vocabularies based on or sentences based on predefined lists, and categorize then, you can use this to construct quantitative indicators and so on to feed into supervision. Now, obviously, that's a bit of a let's say, rough tool. It has nonetheless several advantages. One of them being that it's very flexible. So, let's imagine you develop this tool for a specific use case. You can easily redeploy it to either other topics or other types of supervised entities if you're looking at a different context and therefore different pieces of regulation. Now, it's prone to a lot of false positives, so it necessarily requires some human intervention. But it has also the immensely added value of being very or relatively cheap to implement if you compare with more advanced technologies like, for example, machine learning. Machine learning holds a lot of promises, or I don't want to say held because it sounds like it's already the death of machine learning, and I'm obviously not in a position to make that call, but we've spoken to various people. We've tried to partner with academics to develop machine learning model to help with greenwashing detection. And I think one of the very first conclusions we reached is that it's hugely burdensome and expensive because you need to, have all the necessary training hours, computing powers and so on, and to train again and again in order to get yourself to satisfactory results. And going back, for example, to I think the slide that Thomas was showing earlier with the difference between where supervisors are and where AI capacity was or is, we realized that, if you try to implement machine learning, then you're going straight, still flat for 2-3 years before you have something workable, and then that gets you a huge jump. But then in the meantime, you're left with this huge technology gap, basically, and you need something faster and easier to implement in the short term. So that has really, in that sense, spoken in favor of the regex and more simplistic natural language processing approach. Now, with respect to LLMs, as I said, we haven't gone as far as the Finnish FSA. Based on the initial testing or discussions we've had, it is very promising, and promising is, I'm sure, a word that we've all heard many, many times when it comes to AI. The question is when these promises will concretely materialize and become workable solutions for supervisors. I think for the moment, the initial, let's say, assessment that we have is that LLMs are especially useful for the purpose of selection of supervised entities or entities for further follow-up human supervision, so manual review of then additional documentation information and so on, as opposed to the verification of specific claims where these then technologies are perhaps more prone to hallucinations or black box type of problems.
Okay, thank you. I know from my perspective, I'm struggling what to teach to students, because we are right now teaching all the three technologies, NLP, machine learning, and LLM, but we are really wondering if we should continue teaching natural language processing or not. Yeah, okay. Vincent, with which technologies are you experimenting in IBM Promontory?
Yeah, sorry, we're working for banks, so it's let's say the regulated entities point of view rather than the regulator. So back to Julian's point, we see deep learning quite promising, but only promising at this stage in terms of the ability to detect issues in the data quality at the level of the reporting. So, for example, concretely speaking, missing records can be identified maybe probably with good results. But we miss, let's say, a large use case to really conclude on that. But it looks promising, and as mentioned by Julian, it's a long-term project. You're not going to get your return for the first year. It's maybe a couple of years, as Julian mentioned. Regarding the use of LLM, we've been working on a solution to detect, to match regulatory obligation and controls. As you might know, the last version of LLM are getting better in terms of ability to compare. But what we see in banks is, generally speaking, that they're using a bit old, I mean, not necessarily very old technologies, but outdated because it's going very fast. And in the previous versions of LLM, we didn't get to very good result. It's getting better now with the latest version. Maybe what we see the most promising thing is the use of agentic AI to automate processes. So in our view, the best way to do that is rather to be opportunistic and tactical, rather than starting a project and taking an entire process and try to push it, to automate it through the use of agentic AI. We think it's a much better approach to cut the process in small pieces, assess which technology could answer the best to each step in the process, and start a proof of concept from that point, and be really opportunistic. There might be some step in the process that won't be good candidate for AI, while others will be good candidate. One last thing I wanted to mention is the gap there is between the technology you can use for example, if you use ChatGPT or any other, let's say, leader on your own device, you get pretty good results. But when you go to a bank which is using a technology which might not be the latest one, or that has been trained with not the same size of data set, the results are pretty disappointing. So it creates, let's say, a gap between what you can do on your own with your own device and the technologies that is in place, and due to the constraint in terms of privacy of data, etc. So that's really an issue, this training data set, I think.
Okay. Clemens, I know that you're a little bit less optimistic about generative AI than other participants and speakers. Can you share your experience?
Just to get me right, please. I'm not pessimistic, but maybe I'm just a little bit less optimistic and less enthusiastic to the new technology of generative AI, just because I think there is no light without shadow. So everything that comes also with a downside, of course. And we implemented, or we introduced also Gen AI within the Austrian FMA recently. And of course, we are also within this hype that takes place everywhere. Everyone is for AI and Gen AI and using all those ChatGPT and call it whatever you want. But the thing is, there are a lot of risks associated with that. So, and the practical experience when we introduced one of the Gen AI tools within the Austrian FMA is that, as was also mentioned right now, it produces different outcomes depending on how you frame the question. So there's a very, very dangerous path, and there's a very thin line on how you formulate and you phrase your questions, because you will get completely different results. Because let's be honest, Gen AI was trained to be pleasing, to be very positive, to frame everything, paint colorful pictures with the brightest colors. So everything is always perfectly fine when you ask a Gen AI tool. You should not take everything for granted that is the outcome of such Gen AI tool. And personally I see a risk when we see firms, and I don't know if it's a theoretical, I do not want to blame anyone, but if you use Gen AI tools to polish certain regulatory documents, to give it the last polishing, to frame everything in a positive way, and the outlook and the situation is perfectly fine and stable and everything. So you use Gen AI tools to polish those regulatory documents, and on the other hand side, you have regulators using Gen AI tools to assess those documents then, and create those those traffic light symbols, if it's green or yellow or red. I see there is a certain risk with such a situation when you have documents produced with Gen AI and those documents then later assessed with Gen AI. I think we should avoid a situation, and this is something that reminded me of the situation back years ago when algo trading was introduced in the market, and then everyone started to use algo trading, and you had algos triggering other algos, which have been reacted by other algos, and we all know what happens when algos trigger algos and etc. There is a waterfall then. So I think this is one of the risks. And to come back to your question, of course the Austrian FMA is also playing around with all those new modern technologies. We've created a so-called innovation lab within the Austrian FMA, also playing around with LLMs, NLPs, etc. We've produced and already published on our website a so-called magnifying glass. Sorry for the name, in German it sounds much better. The magnifying glass for certificates and for funds, where investors can upload their kit documents and get a benchmark how the kit of the instrument they are interested in is performing compared to other instruments in the same peer group. So this is one of the tools that we've built for investor protection and financial literacy purposes with NLP tools. And then we had also some ideas using, and I think Mikko also mentioned in his presentation, they did a TSI with the Commission on the market abuse. So we were in a phase previous to this implementation of a TSI or thinking about concrete implementation, but we just had internal discussions about how can we use AI for market abuse detection. And also there, maybe I'm here like an advocate for the risks pulling down a bit the enthusiasm, because we, when we had internal discussions about using AI for market abuse detection, we came into the area of feature engineering and where is the border to profiling. So which features can you use for AI detection of market abuse, and which features would go too much into the area of profiling. So when you have information about the position of a person that is trading, for example, that is the CEO of an investment firm who trades instruments from this investment firm, etc. So is this already information that is in the direction or already enters the area of profiling, because you're using features that is not based on the trading, or the suspicion is not based on the trading activity itself, but rather on the person who is trading. So there are a lot of risks associated with that. As I said, we are still in the discussion phase. So thinking about how we can use that, while on the other hand side, as I said, we already produced some helpful tools for the public and published them on the website.
Okay, yes. So I think we have to be cautious and we have to understand the risks, but there are also many opportunities. So the question is already what stops us from adopting all those technologies in the coming years? What challenges do you see? I know that I've attended a panel where Mistral was talking about adoption of AI in Europe. And so they were saying, for example, that, well, we have the science of AI, we have good scientists, but then the adoption is lagging. And it's something similar to overall digital technologies that Europe has been lagging behind the US in the adoption. So what are the biggest challenges to the adoption? And maybe you already have some solutions. What should we do to speed up adoption? Or maybe we shouldn't speed up, and how should we adopt those new technologies? Let's start with you, Vincent.
Yes, thank you. So in terms of challenges, I'll try to be quick, but there are many. First thing is the choice of the technology, and it's moving very fast. So the risk is to choose the wrong technologies that will be replaced very very quick afterward, and it's without it's a crystal ball. It's pretty hard sometimes to make the right choice. The second big challenge we see in our client is the oversight of the use of the technology. So really the human must keep in the middle of the process. So there is a challenge in terms of oversight of the result, quality. So you will still need an expert anyway to analyze the result. You can test any LLM in the market. If you just ask the question I like to ask is, I'm opening a bank in Europe. I want all the list of all the regulation I should comply with, and you will see the results are not perfect, let's say. The next challenge we see is to adapt the process and the organization to the adoption of the AI. So basically, all must be resynced in terms of the use of the AI. So it's quite disruptive. And then the last challenge is the explainability, the compliance of the results, the transparency, and the management of the bias, as mentioned earlier. So again, we think that human should stay at the heart of the process. So to answer to those numerous challenges, we developed, let's say, a framework which is based on 6 axes. Which could be inspiring for you. The first one is about the choice of the technology. It should fit, of course, the type of task that should be run. And as explained before, it's not one technology for the entire process. It's probably a specific technology for each of the process. And in terms of change management, it's much better to start in a sort of bottom-up approach, very opportunistically, rather than stating, okay, we should, as we can see in some banks, okay, there is a huge budget on AI. Now you can use that budget to do whatever you want. We don't think, let's say, this is the best approach to get results. It's probably a good approach at the beginning to have everyone onboarded in this technological revolution, but if you want to get results, it's better to start little by little. The second axis is the data that should be supported by a strong framework, in particular in terms of KRI, KPI. So really the data quality should be monitored and improved. People must be trained. And as mentioned, for example, the way you write your prompt will lead you to different results potentially. So, and again, I suggest you do some testing, ask a question, reformulate the question, ask it differently, and you will see in a different conversation, of course, and you will see that the results are not consistent, even with the same AI and the same trading data set. governance and ethic. The adoption of AI needs really to be governed by a strong body and take into consideration the risk, the ethics, and what we see also in banks is there is no model inventory, so it's like mushrooms. There are mushrooms everywhere. But in a few months, no one knows where are the mushrooms exactly, what the mushrooms are doing. So it needs to be governed, inventored, etc. Next one is the control on business processes. So you need to adopt a robust methodology to prioritize the process. Maybe you first need to remodel the process. Maybe even to formalize the process. And we see, I have an example in mind where the process was not stabilized, but the client was pushed to put AI in place. And of course, at the end, the result was not good. And then they have to restart again, rethink the process, and then adopt the right approach. And all of this, of course, should be monitored by a set of KRAs and KPI, and the result must be measured.
It's a very long list of challenges.
Yeah, I'm sorry about that, but maybe in one word, you have really to get to have a structured organization and know what you're doing.
Okay, thank you for the summary. Julian, do you want to add anything to this long list of challenges?
So all of the above first. No, I'll add maybe just a couple of points because I think Vincent covered most of the most critical aspects, let's say. First, I think there's so looking more broadly at the adoption of technology, you have this sort of technical expertise challenge or shortcoming, whatever you want to call it, which obviously does not entirely disappear with Gen AI, but is to some extent circumvented with Gen AI. If you go back just a few years to develop, whether it's regex or more advanced technologies, then you need people who are highly skilled at coding and so with highly technical expertise. Now everybody can do Gen AI. I mean, it's just about opening your browser and then entering a prompt, right? Now, whether the prompt is correct or not is of course a fundamental question in itself. But the technical expertise angle or obstacle to technological adoption then with Gen AI is something that I think will soon become outdated. Now, that's great because it means that you can get everybody interested in technology and AI and advancing. And I mean, everybody wants to be part of AI. Everybody wants to test AI, and that's great because that creates buy-in, motivation also. I mean, it's exciting. We're all part of this, right? But it also creates mushrooms, as you described, which is an interesting metaphor, but I think it's a very relevant one. So that means, Gen AI is potentially much more scalable from that perspective, including from a supervisor's perspective compared with, technologies we previously relied on that required extensive training in, understanding the fundamentals of, for example, natural language processing, having people that are able to script and code accordingly, testing, reviewing, and so on, which, again, will not disappear with Gen AI, but, might become easier over time. So that's one important aspect of the adoption challenge. I think the cost aspect is important to facilitate adoption. There are clear opportunities with Gen AI, including for financial supervisors, but the whole business case is not entirely there because for the moment, there's just so much uncertainty with respect to the outputs, its reliability, its quality, and so on, that we need to solve that equation first in order to, before we can envisage large-scale adoption. And I think a good example in the case of supervisory, general supervisory work is that Gen AI is probably not yet ripe for enforcement. So that means, taking actual financial sanctions or taking supervised entities to court, because the outputs is not sufficiently reliable for humans to say the AI has said this and therefore maybe we'll get there, but for the moment you need to rely on AI or Gen AI differently. The same goes for other types of technologies, of course. So that will of course improve over the years, but I think there's still face quite some limitations there. And then last point, I just wanted to also touch on the governance aspect, because I think that's a very relevant point. The fact that everybody is able to test with Gen AI, for example, then creates major issues with respect to how do you control what's going in and out. And when you used to have a center of excellence in the form of a lab, for example, where you could only have people that had the sufficient technical expertise to participate, contribute, and so on. Well, now you can open that up to pretty much everybody. So how do you ensure that best practices when it comes to prompts, for example, are shared internally, that you reuse the information intelligently, and so on? So I don't think this is an issue we have solved. Maybe others have, and I'd be very interested in hearing about this, especially from supervisors. But these would be, from my perspective, the challenges to adoption in supervisory authorities.
Clemens, do you want to add another challenge? I have an impression that our challenges are longer than our opportunities.
Thank you very much. Already Vincent was very comprehensive and touched basically upon everything. Just to emphasize again, I think, and Julian also said that it's more or less a phenomenon that touches everyone. And Julian and Vincent also mentioned that training is very important. Not only training the models, but also training the people using that models, because as it touches everyone needs to be onboarded on those new technologies and be trained to use this technology, because we've heard now multiple times that the prompting is the most important part of it. And just to tell you from a practical everyday experience, and then you maybe understand my disappointment of Gen AI, because we've tested a lot with it, and if you ask the same question with a slightly different wording, you will get two completely different outputs and answers. So asking a question if you support option A or option B, the wording makes the difference if the Gen AI says, yes, option 1 is the way to go, or option B is the way to go. Or another thing is that while testing, we faced a situation where the Gen AI responded with completely made up court decisions, which they never take place. They just made it up and argued with this court decision that you should support that, which you can never find because it never took place. So this is why I'm a little bit cautious on that. On the other hand side, maybe due to those experiences internally within the FMA, our IT colleagues now work on an internal AI strategy to make use of the data and the technologies. And also, as Julian mentioned, our colleagues work on predefined prompts to avoid such situation that the prompt, how you word it, makes a difference. So we are internally working on some predefined prompts that we need every day or something like that.
Okay, I would like to mention another challenge which somehow wasn't mentioned yet, about it's related to the political economy of AI. We do talk a lot about AI in this session, even though we should be talking about technology more generally. But AI is controlled by several companies. There is only one European company, Mistral. So it leads to many problems, concentration of power. And in the Brussels, there's a lot of discussion about sovereignty in France as well. It's a favorite French word today. Do you have a discussion about this in your companies? When you do LLM, do you use ChatGPT or do you use Mistral? Or when you want to design agentic AI, with which companies do you do it? Do you have those discussions inside?
So I think Vincent is much better placed than I am to answer that question. Nonetheless, I don't think I have a firm response to these complex issues, but I just wanted to mention that this is something that We are monitoring the use of AI in Europe, generally speaking, including specifically in the financial sector. And of course, the response, or part of the response, needs to be grounded on data. So I'm happy to share that we've been collecting a lot of information in collaboration with national supervisory authorities on the use of AI in the financial sector. And so we're planning to publish the summary of the results in February. So once we'll have that information, we can make a decision on how to best respond to it.
Very good answer. Yeah, quickly, yeah, Vincent.
Yeah,
Even though you are from IBM, so.
So I'm working for the consulting part of IBM. So we try to be fully agnostic with the technology, and generally speaking, our clients have already made the choice. So let's say we start our assignment with the technology that is generally set by the client, and we try to be.
Can you share which technologies are those? Which models are those? Majority? I don't know.
It's no, it's generally speaking. So we have some Mistral in France, clearly, but it's not the same one that you're using on your private side. So it's let's say old, generally speaking, old technologies. Not really old, but a couple of years is enough to, let's say, have a huge gap in between what you can get in the market and what you. But again, it's not only a question of technology; it's also a question on the training data set. That's really, I think, the main issue. If you want to get the same result as in ChatGPT, you need to have the same data set, and that's really the issue here.
And in Austria?
Thank you very much. Of course, those discussions take place within the FMA. Although I personally would love to see more European solutions coming up in the future. And we heard in the morning session also Europe needs to be more self-confident. So I hope that the situation will improve in the next years. So there will be a lot of more European alternatives to the predominantly US technology, big tech giants. But yes, those discussions internally are taking place, and we assessing all the various options that we have on the table. We try, of course, as we are working with very sensitive data, we try to isolate as much as possible because we are aware of those risks and challenges that are bound to it. So yeah, we hope that in the future the situation will get better.
When we talk about technology, in a way, I think everyone also expected that we talk about embedded supervision and decentralized finance, but we didn't talk about this. Maybe just a quick comment, why didn't you talk about DLT as a promising technology? I mean, Clemens, you mentioned that the idea of having a shared ledger, it would be a very, very nice idea, but is the idea of embedded supervision being discussed as also a promising technology inside supervisors? Let's start with Julian or Clemens. Clemens.
As you already mentioned my name. Of course, yeah, I mentioned DLT because this is one of the new technologies that comes to your mind when you think about how we, and as I mentioned earlier, when you look at the current stage in the process of data submission, how you could improve that situation. And ideally, you could think about of having a kind of distributed ledger where we all are connected to one system. And you also said that I mentioned the idea of a DLT. So I'm trying to separate the technological part of the DLT, because from a technological perspective, the DLT is nothing that would suit perfectly the needs for regulatory reporting, because in a DLT you have a consensus mechanism among a community, which is not necessary within data reporting, because there only needs to be consensus between the two counterparties having a trade with each other, and maybe even the regulator then, the home NCA. But the concept of a DLT, and especially for example, smart contracts could be something that we should think about. And the whole panel is about how can technology help and support burden reduction. I think this is one of the ideas that we should elaborate in the future a little bit more on how can we find a perfect situation where we do not need to to move data from one to the other, and as we also mentioned in the morning, sharing data. So we have to share it with other NCAs, etc., but having one data set commonly distributed where everyone has access to or needs to have access on a need-to-know basis. So this is one of the concepts that I personally like very much to think about and elaborate more in the future, because what I also mentioned in the lunch break in the conversation, that I think we now, and sorry, don't kill me, when everyone is demanding right now quick wins, we should work on quick wins. I think we should now work on the long-term vision, because today we set the path for the future. So we should not please don't take me wrong, waste our time with working on quick wins for the next 2 years, but we should work now how reporting should look like in 10 years from now, and think about solutions that can address all of the pain points, or at least many of them, because DLT, and I mentioned smart contracts specifically, would also address, in my view, the pain point of reconciliation in the post-processing, because we would shift this kind of reconciliation to the beginning of the process, because when a trade is done between two counterparties via smart contract, conceptually, please, then we would shift this kind of reconciliation to the beginning, where the two counterparties need to agree on the trade and on the details. And on these agreed details, the regulators have access to the data, so there is no need to have later on, afterwards, file submission to the regulators, where both sides individually report, and then the reconciliation takes place at the regulator, and then he finds discrepancies, one needs to send corrections, etc. When we shift this part already at the beginning. So
I agree, yeah. Vincent, since you contributed to the European Commission report on embedded supervision, do you think that tokenization of traditional assets would be a good way to reduce regulatory burden?
Well, I mean, the vision shared by Clement, yes, of course, it would be great, and I agree, it's a long-term project. I think the main issue is to share, first start by sharing the same data model for the same instruments. And that's where it might be a bit struggling, because there is a lot of variety in how to represent a transaction, a given product in banks. So I'm not talking, of course, on securities, which are simple instruments, but when you go to derivative, and in particular to OTC derivatives, then you hit the hard part of this. But definitely, this would make a lot of sense and save a lot of money, energy.
We can maybe open the floor to the audience if you have any quick questions to our speakers.
Yes, there's a question from online asking, so this also relates to the previous panel, so the fact that, let's say, human readable is becoming much more machine readable, does this mean that requirements for machine readable reporting formats are now becoming obsolete?
Clement, since I think you disagree with this.
I don't think that it becomes obsolete, but if there is a transformation, which I learned just today, I think we should work on that, because, as I said, interpreting human laws, laws written in human language, sorry to be precise, I think is very burdensome for everyone, and we see it that there are a lot of different interpretations. So when we come to a situation where we have machine readable requirements, and I fully agree on what Vincent also said, that we need to first solve the differences in definitions, etc., then I think, yeah, we have a very huge step done in the right direction.
Another question, or maybe the answer to the same question?
Maybe just a comment about the timeline of human readable becoming machine readable. I think this probably holds great promises, but we're not there yet. And so the question is, what do you do in the meantime? And with machine readable, I mean, Clemens, you're much more expert at this than I am, but I think we have already what is required. And yes, it is expensive, but until we have full machine readability of human written inputs, then in the meantime, it's a difficult gap to bridge in using anything else than machine readable data.
And I think also two humans read differently the same report as well. So human readable is not a standard.
And sorry to mention that again, but machine readable or providing rules as a code also is associated with a lot of risks and challenges. So just to mention that, because who is responsible if there's an error in the code, etc.
Any last quick question? Yes? There's a gentleman.
Thank you. Sorry. Jonathan Lee Kaizen again. I won't give any more introduction. So aside from supervisory concerns over use of large language models, there are a tremendous number of commercial concerns, and particularly in relation to sort of data leakage and confidentiality. I think this is hugely compounded by the fact that there are a number of large US firms that really dominate this space. I just wondered what the panel's thoughts were around whether the need for European solutions and the need for possibly even EU-sponsored solutions is much greater simply because of fear of adoption, for the fear of losing commercial advantage through data leakage. I know I think it was an electronics firm in which some quite advanced specifications of a particular piece of equipment were sort of widely leaked across the internet as a result of one individual sort of putting a particular question into ChatGPT as an example.
I guess it's a question to the supervisors. Clemens, you already mentioned data privacy. Yeah.
Exactly. I already mentioned that, and I hope that in the future we'll have more European alternatives. And in this point, I'm very optimistic because we can see also in different other areas like the payment services, etc., digital euro or European service payment service providers, etc., coming up and stepping up to be real alternatives to US-dominated tech giants.
Yeah. Let's hope Europe is not only consumer but also producer of technologies. Okay, so let's maybe stop this panel. So thank you very much to everyone, and let's have a coffee break.
Work now? Yes, it does work now. Very good. We also have Chris with us. Very good. Chris, can you hear us?
Yes, I can hear you very
Excellent.
clearly, Olga.
Very good. Thank you for joining us. And thank you to everyone who have lasted here until the end of the day, even though we decided to give you a bit more of a physical challenge by putting up the temperature. Just rest assured we're trying to resolve it. I cannot promise if we're going to manage in the next 50 minutes, but the issue is known and we have colleagues working on this. It is always a challenge being on the last panel of the day, because to a certain extent the topic has been exhausted from so many different angles and with so many different views that it's not a straightforward question, what else can we contribute? But we're going to give it a collective effort. And in particular, I will invite the panelists to not only look at what is wrong and what could be improved, but much more importantly, going forward, how we can do it and what exactly needs to happen. So a bit more of a forward outlook. But before we start with the discussion, I will not forget to introduce the panelists, even though I assume many of them are very well known to the audience in the room. Nevertheless, starting on the screen. Chris, I will start with you. So we have Christopher Buttigieg, who is joining us from Malta. He is the Chief Officer responsible for supervision at the Maltese Financial Supervisory Authority. He also happens to be the Supervisory Board member at EBA and ESMA. He is currently running his term as the chair of ESMA Standing Committee on Proportionality and Coordination. And before that, he was the chair of ESMA Data Standing Committee until late 2022. Going down to Rudy, which I guess is a very well-known and active member of the financial industries community, is a managing director at the BVI, which is the German Funds Association. A very important and interesting perspective. Funds, they are definitely in the scope and catch of reporting, but they are a little bit less sometimes presented or heard when it comes to the reporting. So very glad to have him on the panel. And Rudolf is also a well-known advocate for data standardization, interoperability, and automatization of the reporting processes. We then have Fabrizio Planta, who I have the pleasure of reporting to on a daily basis. So strategically, I don't feel being well placed on this panel, but okay. Fabrizio is the head of Data Intelligence and Technology Department. This is a department that has been put together in ESMA after our last reorganization a few years back. Department whose main objective was to ensure a consistent and coherent work on the full data lifecycle, meaning the work that starts with definition of the reporting rules and legislative framework to the subsequent work on implementation of those rules, design of the necessary IT infrastructure, collection of the data, and essentially analysis and use of that data. And then on my left, I have Andrew Harvey, which is the Global FX Division Lead for Europe at GFMA. And Andrew has been with the division for since 2013, so once again has suffered it all since EMIR 1, I guess, and is, among others, globally responsible for trade reporting as well for the front-to-back EU regulatory agenda, including MiFIR and EMIR. So in this pleasant company, what I would like to explore is would be concrete actions and concrete steps that could be taken in the immediate future and also on the longer term to decrease the burden of compliance, to address all those pain points and the cost drivers. But before we start discussing how to do it, I would like to bring the panel a little bit in a synchronization on understanding what is it that we're actually all talking about. And I would like each member to, with a few words, without going into too many details, but present their vision on burden reduction. What do they understand the burden reduction to consist of in a very concrete and precise terms? And then we're going to discuss how we can possibly achieve it. Any volunteers to start? Fabrizio, you're a volunteer, I know. Sorry, Christoph, we'll start with you.
If you'd like me to, I can start myself, Olga.
Please.
First of all, I'd like to thank you for the invitation. It's an honor to be invited to this event. A lot of interesting points have already been made. The main issues that obviously need to be addressed are the issues of reporting and the burden that is resulting from reporting and how that burden can be reduced and how data can be better used. And I've known Olga for now six years. And at the time when I was the chair of the ESMA Data Standing Committee, we used to have very interesting discussions on how data should evolve at European level, especially from an architecture point of view, and how things should be structured in order to become simplified and for Europe and European supervisors to be in a better position to use that data. And some of my interventions today are based on those discussions. I'll be brief because Olga asked us to just introduce, but my main intervention will be on basically two ideas. Number one, centralization of the submission and storage of data, all related supervisory data at the level of ESMA. And when I say all, I mean securities and markets related data. Then the development of centralized advanced analytics, which can be used to extract and process that data for supervisors. And finally, the establishment of an EU sovereign data center, something that currently we don't have. We are relying primarily on third country service providers to store our data, which makes, in my view, Europe vulnerable. And as a result, I believe that as part of this discussion, we need to put also the point that Europe requires this EU sovereign data center, and that the centralization of data should also be combined by the requirement that that data is stored within such a center.
Thank you, Christopher. That's very clear and very concise. Appreciate that. Fabrizio, I see you eager. Okay, no, please.
Happy to go next. I think that today is many examples of the burden and how they can be reduced were given. One of the burden is reporting the same information multiple times for multiple purposes, or sometimes even for the same purpose, is the continuous changes of different reporting regime that leads to multiple implementations. So these are certainly the two things that we intend to address with the holistic review. One, and aiming at reporting once principle that will achieve the reduction of these two components at once, because once you have a single reporting regime, then it's only when you review that regime that you need to implement the new changes, and hopefully we will have a less frequent need for updating it, and by all authorities relying on a single source, you don't have then the multiplicity. Then another way of achieving is the burden is what Christopher said, and was said also before, is the multiple reporting channels. So also the technology and reducing the reporting channels can contribute to reduce the cost by reporting to one authority, and that authority will then make at disposal the information to all that needs it. Still, the biggest cost is the fact of maintaining different systems to then report the information. And I know, because we are also in charge of system developments, and it's certainly a huge cost if you have just to maintain slightly different data schemes to report to one authority or another. And I think that we have already proved in the past that we can go, we can improve that. I mean, from MiFID to MiFID II, we have made a significant difference, and 10 years has passed, and also we have learned, and I think that we have proved that we have all the best intention to really make a difference with the concrete burden reduction initiatives.
Thank you for that. Rudolf, what is the industry view?
Yeah, I would not like to repeat what ISTA, especially in Société Générale, have said very concisely, but concentrate a little bit on the fund issue. And I'm thankful for Corrado for bringing that up at one of the previous discussions. I mean, in funds, we have two levels of reporting. First, we are reporting on the individual product, besides transactions, and we are reporting on the fund management company, its behavior. So we are covered by AFMD for so-called alternative investment funds, UCITS since 1985, money market funds, and also ECB statistical frameworks. And that is impinging on the work of the regulators. For example, if you read Steffen Kern's very important reports on the fund industry, when he talks about UCITS, he always refers to Morningstar data because he doesn't get individual fund holdings data from the industry, although it's available at the ECB under ECB statistical reporting requirements on an ISIN by ISIN reporting. So I guess we overall would welcome a single regulatory reporting mechanism which would cover all aspects of the fund products, including across the regulations and directives I mentioned, and the companies as the ultimate solution. However, we are also bound by concrete regulatory proposal. In this case, there is a regulatory proposal to change the so-called AIFMD reporting on the alternative investment funds, and that has already to be implemented by 2027. As we don't believe that by this date, the very complicated policy debate for full data exchange, especially including the central banks, can be implemented, we would rather go for a low-hanging fruit in that area as a burden reduction by aligning UCITS reporting with a few amendments and the AFMD reporting, which will be implemented anyway. But also call for not expanding the reporting coverage. There are ideas in the consultation by national competent authorities, for example, to add ESG data and things like that. We would like to limit it at the stage where it is. In that sense, there would be already burden reduction, and then come up with a holistic plan towards the integrated reporting scheme, which would really lead to a burden reduction. But as we are not as confident as we were years ago, Francesco, we sat together at an EU Commission conference on harmonized regulatory reporting a few years back, and they are wholeheartedly supported a single reporting mechanism. Our members more are right now of the opinion, let's not overinvest if it's not a holistic plan. So stay with the existing reporting scheme, mainly through national competent authorities, and let ESMA aggregate the data. That would be sort of the other qualifier in burden reduction. Thank you.
That is very clear. Thank you for this perspective. Andrew.
So that really has left me with a last chance saloon of what's left on the burden reduction. So I've been looking at this in several ways, and I think a lot of the information, obviously, without being a greatest hits over the rest of the day, I think a lot of the feedback we've heard today has given a really good framework for the strategic evolution of the reporting in the EU and data and so forth. But I think as I look at it, I think there are two separate things within the burden definition, which is interesting. We're looking at this in the last panel of the day rather than the start of the day. But I think there's a process piece, there's an operational piece, how to make the processes more effective. But then there's a commercial question, which again was touched on through the morning, through the afternoon, but how to reduce, was it 4 billion euros or dollars, the cost of reporting, and reduce that by 25%, so billion euros to take out of the reporting cost. For me, that seems to be leaning towards some pretty big ticket changes on how reporting and data management works in the EU, rather than some of the tinkering field and type things, which again would be welcome from a process perspective. I'm not convinced they're going to give you the big sort of financial return. So I think there's a really interesting playoff between what can happen over the next 12 months, which we'll come onto shortly, with respect to data, you know, things going live on free format fields and all those sort of things that seem to have an operational burden. So the more longevity, the longer view of, you know, how does the EU take out $1 billion worth of cost of reporting?
Thank you. Yes, indeed, the question on what burden is a question that might equally nicely fit in the beginning of the discussion or the day, but it also can be a nice closing point for us to have a place where to pick up once we start discussing.
It's the only thing left.
Not only, it was interesting. It also puzzled me ever since the conversation on the need for simplification and burden reduction started, that we have not started with the definition of burden, because the importance of definitions is very, very well known in the data space. So the fact that we haven't agreed what burden is, but started collectively reducing it to a certain extent, also leaves the doors very much open now for ideas and options on how exactly to do it. Chris, but I would like now to go to you, because you have a bit of a unique perspective as well, by virtue of being a chair of Proportionality and Coordination Standing Committee. Being an insider, I know that there is a lot of discussion and conversation going, including on what kind of cultural changes might be required in the approach to the lawmaking, rulemaking, and regulatory treatment of data that could in the longer term allow to simplify or reduce the burden somewhere. Is there anything that you perhaps would like to bring to the attention or flag as indeed consensually agreed or understood cultural changes that might be required? And I will equally be happy to hear the panelists' views on that afterwards. You're on mute.
In terms of, first of all, thank you for the question, Olga. In terms of culture, there has been a lot of discussion within the Proportionality Committee, but also at the level of the ESMA BOS, on how culture can change. From a rule-making point of view, I mean, we're asking the same people that drafted the single rule book over the past 15 years to now reconsider what they've done, which is a challenge. So one of the things that we've done is to establish a set of principles which the drafters of the legislation, including the standing committees, should take into account when they are preparing the technical standards, the guidelines, the opinions that are required in terms of level 1 regulation. These are now, they've been agreed by the board, they are now being presented and discussed at the level of the standing committees. And just to give you an example, I mean, one of the main points that we all agreed to, and likely that the people in the room will also agree to, is that there is too much fragmentation in terms of technical standards. There are too many. So whenever there are technical standards that need to be prepared, we should try as much as possible to consolidate into one comprehensive document which can be understood by the industry and implemented. Now, this is obviously something that needs to be implemented, tested, and see how it will work in practice. But clearly it is a challenge that we're working on to try and address effectively. In terms of data, I mean, as Fabrizio already mentioned, the work has already started. There is the call for evidence. There is also a consultation with respect to fund reporting. So the work has started. However, I'd like to mention this. I think we need to look at the bigger picture. Whilst this is good for the short term, in the long term, I think we need to be more ambitious at European level. And one of the things that potentially could be considered by the European Commission is establishing an EU Financial Data Act, which basically would consolidate all the regulatory requirements and be one source of truth with respect to data, and one source in terms of requiring data reporting. Such an act would also, in my view, should also empower ESMA to create its central data reporting and storage facility, and also empower ESMA to further achieve supervisory convergence through centralized advanced data analytics, which can be used for various purposes. I mean, it can be used, for example, to have a centralized risk-based approach with risk-based metrics in the various sectors, and then also have more harmonized minimum engagement levels with the industry at European level. So this is all things that can be done if we start thinking more of a centralized approach. Centralized approach, not from a supervisory point of view. I believe centralization of supervision is likely to result in more bureaucracy. However, centralization of data, because centralization of data will facilitate supervision at national level and will also make supervisory convergence more achievable. And ultimately, this is what ESMA is there to achieve.
Can I respond? By all means.
Sorry, Chris. In response, I think you've touched on quite a few different topics there within the realm of burden reporting and so forth. But I think there's obviously a time aspect of how quickly something like that, if it were to be the preferred route, gets sort of agreed and signed off and so forth, which doesn't seem like something that's going to happen relatively quickly. But I think as you start unpacking some of those points you just said and what we've heard earlier this morning and this afternoon, there are a few things that would make a difference quite quickly and will probably underpin some of the strategic decisions as well. So Andrew went through the points around the response that we put through, and Olga, you and I have worked on some of these things for what feels like decades and so, but I think standardization of data, right? So the lack of ability to interpret a requirement is super important. And without speaking for everybody in the room, but I still get phone calls on a weekly basis on relatively simple reporting terms that is still not yet agreed or require an industry guidance document on top of the regulation, the technical standards, the Q&As, the guidance, whatever else is out there. There's a multitude of different documents. So I think the sort of keep it simple mantra is super important. So whether it's a technology solution such as AI or something else, we heard about the different terms that organizations use on how they represent instruments. All those sort of things, I think, are things that can be looked at relatively quickly to start putting some building blocks in place to facilitate some of those strategic decisions and evolutions as and when they happen.
Yeah, I can fully support that. We also asked for validation rules, data quality rules, and a uniform dictionary. Especially reference data should be reused, as mentioned several times before, not only identifiers, but others. And while we sustain the idea, I think, Christopher, it's a 5-year plan at least, and that needs to be properly planned and implemented. And in the meantime, we would like rather to have a targeted small reform of the pending AFMD review, aligning it with UCITS in the aggregated reporting form, not adding new data, so that could already reduce the burden for those firms who manage both AIF and UCITS funds. I know that that is not necessarily the opinion of all the members of the European Association, but in Germany that's a very important fact because that's the case for us. So in that sense, support for these ideas, but we need a concrete plan for that and not just bolted on the existing ongoing reforms.
If I may, two things probably three from my side. The first, the paradigm shift that Verena mentioned in the opening speech of avoiding that each authority requests its own reporting regime for addressing one single need, and looking at all the needs together and come up with one reporting regime that can fulfill all of those. Second, looking at legislation across the board from the data perspective, what Chris called the European Data Act. I mean, it's the holistic approach is the same. We are all going in the same direction, but we also need to change the way in which we regulate. We have different units. I mean, we have done it, at least in ESMA, to creating a department that look across all the regimes. It's not necessarily the case elsewhere, where you still have different directorates, different units, each looking at a different reporting regime, a different legislation, each legislation incorporating a new reporting regime. And this that leads to what was mentioned by ICE this morning with one authority defining a new reporting regime that basically replicates an existing one but without using international standards and creating additional burdens. So this is the certainly two things. The third one came to my mind when I heard about the usage and also some tendency of the funds to just leave things untouched, and then you aggregate and you make the data available. Is not that easy, and again there are always exceptions, national rules, national specificities that justify asking an additional thing. And if we go for exceptions, we will never manage. So we need also to overcome this approach of justifying exceptions and then thinking that the aggregation naturally will lead to data that can be consumed. We have heard this morning multiple times the need for good data. If you don't start from an harmonized reporting regime with the same schema, you will never arrive there.
I fully agree. That's why we're saying in the short term, if we could, that the German-specific demand, again, not necessarily shared by all EFAMA members, is that one could align the usage reporting, which indeed is full of national exemption because it's a directive, and that is understood through a legal act like the implementation of the AIFMD, with essentially providing for the same very few aggregated reporting items under AIFMD also for usage. That would lead to this harmonization, thereby also reducing the national fragmentation and not adding too much of a burden, because AIFMD reporting is pretty much aggregated at this form, and then have a more detailed review, including the detailed ISIN by ISIN information available at the central banks at a later stage. And I understand that that is a huge legalistic issue to get this cooperation going.
And again, just to add to that, and that's sort of you talking, I was thinking through some other things. So I think we spoke about the quality of the data and obviously the harmonization of the data. We haven't yet spoke about the sources of that data. So I think the other burden stroke simplification, whichever bucket we want to put it in, is where is data coming from and being sourced both within organizations but across processes. And I think it's helpful then to look at the whole front to back reg landscape to see what functions are being performed in jurisdiction or cross jurisdictions depending on asset class and so forth. But that can show you where there are other functions being performed that can complement regulatory requests for data. And we heard from Verena at the start what that was for. And I remember the point, Clemens, earlier you were talking about the sort of smart contract for execution. I'm sitting there thinking, but when a trade's executed, the data is matched there and then to make sure risk is right. It's then matched through confirmation and settlement. It's then matched through portfolio reconciliation, collateral reconciliation. It's the same data within realms is also then matched through any controlled extra frameworks, so suspicious transaction reportings, P&L exceptions, and so forth. So there's a series of like-minded outcomes, like-minded processes, dare I say, that would also be quite fun to talk about from burden reduction. But I think when you start understanding and looking at the ecosystem as a whole rather than one line on a dare I say, a regulatory spreadsheet, you're able then to look back and say, okay, where is that commercial billion euros coming from? Well, these are the different avenues that are actually all perform the same function and maybe opportunities for further investigation.
Thank you, Andrew. Now with me attempting to claim back the moderation of this panel, and I will also allow myself a couple of remarks. The reason or one of the observations, perhaps, why we ended up where we ended up is not because there was a lack of understanding on the importance of standardization. Not because there was some kind of a desire to multiply reporting flows or duplicate them across the board. There are certain reasons at the origin or lessons learned as to why we are where we are, which we collectively, I think, already long agreed and today confirmed is not a good place to be, and it's a right moment to look for collective solutions to get out of it. But one of the reasons why we are where we are is because one part of the siloed approach to different, be it regimes or different sectors, industries being looked in their own right. So hopefully that lesson has been learned, and there are better ways of regulating. There was also a question, and I believe it remains to be the question, that neither is there industry-wide data model, data dictionary, data definition solution that can be easily relied upon, which is what originally has led regulators to start defining their own data elements, data concepts, which at least would have been aligned at the level of the legislation. And then indeed it had watered down to all the complexities of mapping and alignment. But there were some original reasons. It's not an accident that we are where we are. What is good about our position, though, it's the first time in the last 15 years that we are in sync with the political agenda. And that's a very privileged position to be. There is a lot of attention on the simplification burden reduction. There is a lot of demand, or at least, there is a lot of commitment to introduce change. But as any political wind, I guess we should not rely on it to be here for long. So we potentially have, or presumably have, a few years ahead of us where we can act, and that's the opportunity that we should not miss. But it also means that the time has come to start talking about concrete solutions and very specific actions that need to be taken, short-term, mid-term, long-term, and move on with these actions, going beyond the phase of identifying the problems, identifying the cost drivers, and speaking about how everything is not right and could be done better. So that's my question essentially for the end of the day to the panel. What concrete actions, what concrete steps, by who do you think could be taken, in particular in short term, but also in the longer term, for us to be able to look back in 2028 and go, remember that conference in 25 we were sitting and we were discussing what would be done. We were right, that was the thing that should have been done. Look, this is what we have been doing for the last 3 years, and actually it had led to the following results. Any ideas what this could be?
This is the proverbial letter to Father Christmas. Okay.
Go at it.
So let me start then, given that my kids have already started talking about Christmas about 3 months ago. So I think there's a few things. One, I think this exercise today has been 100% successful, and you should absolutely do it again. I think the engagement with the industry is super important, both at the strategic level, but also in creating forums where you can get SMEs together to discuss through specific targeted items. That doesn't mean you need to get 100 people in a room, that may be 5 people, but very, very targeted, and we're happy to help with that with the other trades as well. But I think that would be super, super important. I think the second thing within the next 12 months would be to have some clear comms on where this process is going. So if we think about firms building out their strategic direction, given the competitiveness and given the increasing round-the-bank costs of running, reg and compliance programs, I think firms need to understand where this is going, what timelines are operating to, so they can start budgeting and having their strategic discussions. And lastly, I think for the next 12 months, I really think it's important to do that front-to-back analysis of the regulations and see where there are different processes or regulations that are getting to the same outcome, or outcomes that could be beneficial in meeting a need that's currently being met through reporting or whatever it may be. The 3 to 5 years, I'll let someone else have a go there, if that's all right.
Thank you. Andrew, Fabrizio, would you like to give a go at that?
Yes, without necessarily spoiling what we are doing and what we are releasing, but certainly it's clear, the call is clear to be ambitious in terms of the long term, to think about low-hanging fruits. We need to see whether this low-hanging fruit merits the cost and the investment that they will be attached to it, because one of the concerns is indeed that each time you introduce a change, it is a cost, so it really needs to be justified by the benefits if we do something intermediate, and whether they are too low to really make the effort, or too high to then not being justified, because we will directly aim at the long-term solution. But I believe that this is the really difficult choice to make, and with which we needed to engage certainly with the industry to understand. But I believe that our cost-benefit analysis was, our call for evidence was not fully understood, and I say from Andrew that it was clear that we needed to address the current needs of the authorities with the two regimes. So without necessarily replicating all MiFID in EMIR or vice versa, it was clearly mentioned in the call for evidence that schema changes were needed, because one thing is using the data for financial stability, another thing is using the data for market abuse purposes. Now, we need to see whether it is, we will most likely assess the cost benefit of also other variants to see what is, to really focus on what the low-hanging fruits are, and whether we then it's justify the going through an intermediate step. But certainly one of the principles that we consulted upon was that what authorities are receiving today, they need to continue to receive it tomorrow.
Yeah, I mean, from our perspective, in the short term, obviously the AIFMD reporting review needs to be done. That could be aligned on an aggregated reporting basis with UCITS to make things easier. On the data quality standardization, as mentioned, is wholeheartedly supported. One idea which was already launched in the EPTF report 2017 was that there could be, like in the ISO standardization area, a regulatory reporting market practice committee, which would be made up of the industry and, for example, ESMA, to discuss really remaining interpretational issues, for example, and make sure that you understand why the industry or parts of the industry are coming from a certain interpretations, other are coming from another, but as a standing body, not just from one consultation and three days later another consultation. And then our wish list on the transaction reporting, which should be separate, is we still continue that the sell side is reporting the MiFIR transactions for us, so we would not welcome an extension in the short term of reporting obligation of transactions in the fund under Article 26 MiFIR, sorry. And in the short term, we would also love, and it's not the fault of ESMA, we have the new reporting for the active account under EMIR 7B, and we have 7D reporting. In both cases, level 2 is missing, but still, especially in 7D, the implementation date is already coming, and we don't know what to do. If such things could be resolved shortly between the regulatory bodies, that would be obviously very helpful. And in the medium to long term, I agree with Christopher's idea of having a concise plan for transaction reporting, maybe with a separate chapter on fund reporting, but that needs to be really a holistic plan, because otherwise our members, and I think all asset managers in the EU, would simply like to stick with what they have, because we are also making little use of the data we get out of it. If we then also get later aggregated data out of it, acceptance may be better, but there we need to see a holistic plan so that people are willing to invest wholeheartedly.
That's very clear. Thank you, Rudo, for that. Chris, would you have anything to add?
The only thing I'd like to add, Olga, is that, as Andrew rightly said, any changes will involve implementation. Implementation means additional costs. So at this stage, in my view, what Europe should be concentrating on is to think and come up with a roadmap for data in Europe. So where do we want to take this? I have my views, which I've expressed, and very clearly, I think Europe needs to, at this point in time, to work together, both ESMA and the European Commission, but also with the help of the industry, and also involving the ECB, as Rudolf rightly said, I mean, in terms of fund reporting, there's also fund reporting which takes place at the level of the ECB, which is separate for statistical purposes, and perhaps one should think about consolidation there. So we need a clear roadmap. We need to have a clear roadmap sooner rather than later, because again, this is going to take time to implement, and we need to start now because it is urgent. Apart from the issue of the costs that can be addressed through a proper roadmap for data for Europe, there's also the issue of vulnerabilities, which for me is a major concern. The fact that we are completely reliant on third country service providers in order to store our data, for me is a big risk for Europe. And Europe needs to think about it and needs to also consider having its own sovereign data center where the financial data is stored in order to ensure its integrity, even in terms of access to the data. But that's perhaps a topic for another day. Thank you.
Though a topic that has surfaced a couple of times in other discussions today, so obviously a topic very close to the heart of many. I will allow myself a luxury not to summarize at this stage, because this was a Christmas list, right, for Santa, and I am truly a believer that the list must be fulfilled in its entirety. And I also have not heard particularly too controversial or conflicting views. I believe many ideas shared, they're actually quite complementary, and there is definitely everything has been noted, and there is definitely a lot of work in the coming weeks and months also to see how it's upon ourselves here at ESMA convert this into very concrete steps and which stakeholders to engage at which levels for which kind of messages to be passed on and make the wish list happen. We have 4 minutes. This is the last panel of the day before we move to conclusions, and I would like to see if there are any questions or maybe any comments that the audience would like to raise or share. What would we do without you? No, you shouldn't be, please. Leading by example. The microphone is coming.
Thank you. Jonathan Lee from Kaizen again. I am a little bit concerned about these suggestions of a single regulatory reporting template. I do feel that these businesses, the risk management systems, the expertise, it's all hugely siloed. And if you were to consolidate things into a single regime that looks at everything from derivatives, outright securities transactions, commodities transactions, securities financing transactions, etc., I guess it's possible and plausible, but it would need to be segmented in such a way that the relevant individuals with the relevant exposure to that particular market and expertise were able to unpick it. To give this to a generalist who knows nothing about how a securities financing transaction works or knows nothing about how a credit default swap works, I think would be quite dangerous. So I just wondered what the panel's thoughts are as to whether that is genuinely a utopia or whether we should actually stick with distinct transaction reporting regimes, however they're delivered, but maintain that sort of delineation and keep things within those silos simply because that's where the expertise sits.
Britta?
I'm happy to take this one because I think that the call from the responses and also from today was clear to break the silos. And but then, of course, we also need to be realistic and we need to be pragmatic. We cannot mix derivatives and fund reporting. That was never on the table. I mean, we started talking about derivatives reporting. The responses to the consultation very much call for integrating securities and financing transaction as well. And but that is what we are focusing on the holistic. Of course, we had also a more ambitious approach looking at commodities and other regimes, and certainly in the context of gas and energy, there were call for integrating that as well, given what was mentioned earlier today. But the general feeling was that the option to be in our consultation was unrealistic and too ambitious. So I think we need to if we want to deliver, we need also to be realistic and start from something that can be delivered. But certainly, if we talk about the derivatives, it doesn't make any sense to have two pieces of legislation having their own regimes and having different structures for reporting the same transaction on the same instrument.
Just perhaps to add, I guess it's worth leaving the door open that while it can be a single reporting regime or framework, it doesn't necessarily equal one single template. It can be a coherently developed reporting framework that then adequately reflects on each and every individual template, but taking into account what other templates look like, what other data is being reported, and that should preserve this specialized knowledge and competence when developing the relevant templates, but allows to get rid of quite substantial number of overlaps, duplications, sometimes contradiction in definitions. Those should not exist, and obviously you will not eradicate them unless you start looking at all definitions holistically. So not just to spook anyone that there is some kind of a secret master project on one big template for reporting of everything in one go. No, that's not in the making, at least not yet.
I would just add what I said before. A regular private-public partnership type dialogue would be helpful, especially to get the expertise of these various groups together. I mean, ESMA has already embarked over 10 years ago on not just defining its own reporting, but taking the extra pain of going through the ISO process, having messages, for example, approved by ISO, which is including a sort of private-public partnership dialogue, because the industry can participate. And if that could be rolled out more holistically to regulatory reporting, again, not just having consultations every other year or so, but as a permanent sort of consulting body, that could also help address a lot of these things we have been discussing, which form the burden.
Thank you for this reminder, Rudolf. Indeed, that's a very valid point. And on this positive note, I would like to close this panel. Thank Christopher for joining us. Thank the panelists. And that brings us essentially to the last session of today, where we'll ask...
I take my notes.
Please, Fabrizio, you're free to go. The last session of today, where we'll ask Fabrizio to sum up a little bit the event, takeaways, and share any other insights he would like to share ahead of a lot of different initiatives in the making on our end. Please.
Thank you. No, I will be short also because it's pretty easy to conclude. We all agree. So there has never been a more consensual conference I participated in. So we agree that it's time to shaping the future of data reporting, as Varina called at the beginning, and that we need to do it together. I mean, it's clear there is a clear engagement, a clear momentum to do it, and a lot of support for this initiative, and the call for additional initiatives, both in the consultation, but also today there was the importance to engage with the stakeholders, call to have a clear roadmap, call to replicate the T+1 model that came out also during the consultation, and basically work together to find the practical solutions. As I said already a few minutes ago, a lot of calls to breaking silos and looking at the reporting regime holistically. Certainly we have heard in the first panel how the single market is key to simplification, and how harmonization is also a key element. And there was a clear indication from all the authorities that participated that simplification doesn't mean deregulation, and that there should be no deregulation, no de-supervision. And clear call for data sharing being an essential element if we want to reduce the reporting burden and arrive to a report once principle that it seems that is also very much consensual both from the public and the private sector. There were clear suggestions from practitioners, industry participants on way to reduce the cost, also through low-hanging fruits. We need to see what is the implication of those. We will assess it together. Our cost-benefit analysis will certainly look into that. But certainly the frequency of the changes were mentioned as one of the of the burden, the dual side, and the duplications were clear elements that were mentioned, and that we will look into that, and that we have also already highlighted in our consultations. We have heard in multiple panels and during the day the importance of data quality and data use. It seems that the data that are reported to the authorities are not much used by the industry, but it's true that though the standards, to my knowledge, are indeed used. We had received positive feedback after some years on the use of LEI also for internal purposes, in particular in large groups. And this is certainly a change that was introduced through regulatory requirements. So we have heard from the Commission how data quality is also essential for AI to work. We have certainly different views around AI, what it can do and what it cannot do. But it's certainly something that needs to be looked carefully, and that there is clear that there are risks, but also a lot of opportunities there. The final panel, I was part of it, so not much to add apart the certainly very nice thoughts about the decentralization. Centralization, in my view, does not necessarily mean reporting to the same authority. It's ideally that could be the model, but again needs to be looked to which extent that is at the cost, and it is justified, or certainly there are benefits because you will then not need to have multiple reporting channels. But for me, what is key is that we report the same thing and that we analyze the same thing together. We store the data in a single environment where the different authority can have access and work together, which this will certainly reduce the cost. I know that it's a huge challenge also for us. There will require investments not only from the industry side, but also for the authority, that we will need to redo a lot of the work, modify the system, but I think we are ready to do so because we have a clear call for it, and we are happy to engage in this journey together. So thank you.